things at MBO Capital and our partners at various portfolio companies that we're going to learn about over the next couple of hours. I'd like to welcome you to what is our inaugural MBO Investors Forum. Without preempting Mr. Jide Ogundare, who's going to speak after the short video presentation, we have, I just wanted to give you some background on why it is we're all seated here today. One of the things I love about my job is the ability to interact daily with fellow Nigerians who are here not by choice but by compulsion, shall I say, to make a difference to this burgeoning economy. And a lot of times when I'm meeting with entrepreneurs, filmmakers, investors, they're always asking, so what else are you guys doing? What else are you investing in? What's happening? What's going on? So this really is an opportunity for you all to learn about some of the other ventures that you may not be familiar with that MBO is exposed to and is investing in. The theme for today's forum, which we hope will be the first of many being done on an annual basis going forward, is unlocking growth through impactful investments. Given Nigeria's status as a, they say developing economy, but I like to think frontier economy because, as they say, if they explain Nigeria to you and you understand it, they haven't really explained it very well. But one of the things we're going to do is, in addition to hearing from about 7 of our portfolio companies, we're also going to have a keynote speaker. He's a friend of the house, Dr. Abiodun Edipe, who every time I hear him speak, I feel like I understand Nigeria better. Okay, so we're going to get started. We have a short video, which just gives you a little bit of background on what we've been doing to date, and then we'll move on to the other events on the agenda. Thank you very much, and it's lovely to see so many familiar faces again. Thank you.
Power in Africa. Our vision comes to life through the stories of the businesses we serve. When we met sourcing and produce, they relied on third-party storage facilities and outsourced fumigation of their commodities. With our investments and advisory services, they acquired multiple warehouses and built a fumigation facility. They expanded their operations beyond Nigeria and now have a presence in 4 additional countries, growing revenue from 600 million naira in 2021 to 4.4 billion naira in 2024. Across sectors and geographies, they identify growth opportunities and invest capital. Over the years, we have built a track record of performance with measurable social and economic impact. We have funded 23 films streaming on Prime Video and Netflix, showcasing African stories globally. Over the next 12 months, 12 more projects funded by MBO Capital will be released across cinemas and global streaming platforms. With over $6 million invested to date, these projects have generated an average of 150 jobs per production, with projects filmed across 10 Nigerian states. Looking ahead is Project Legion, our 50 billion naira bond issuance program, aimed at scaling our investment footprints in the power, healthcare, and hospitality sectors, which are crucial to Nigeria's economic development. At MBO Capital, we are shaping markets, driving growth, building Africa's future, investing in growth, committed to Africa.
All right, thank you very much. I wasn't expecting applause, but thank you. Okay, so next up we have our CEO's address, Mr. Jide Ogundare, or for people who don't feel like calling him Jide, J.O. as is also known, although there are multiple J.O.s in the house today. Thank you very much. Please, Mr. Jide Ogundare.
Good morning, everyone. I see distinguished guests here, investors, partners, colleagues. I thank you all for coming and taking the time to be here. I don't know, I hope this short video, very short video, you just watched, provided a clear sense of who we are. We are a firm committed to disciplined investing, strategic partnership, and measurable impact across the sectors we're active in. Since our founding in 2012, MBO Capital has been driven by a clear purpose to be the investment partner of choice for institutions deploying or raising private capital in sub-Saharan Africa. Over the years, we have built a diverse business that spans principal investments, financial advisory, and fund management, underpinned by strong governance, a focus on real assets, and a track record of delivering value. Our journey has been one of purposeful expansion, unlocking opportunities across more than 12 sectors and managing assets with a cumulative value of over 360 billion naira, while supporting more than 6,500 jobs. Our credibility as an investment manager continues to be validated by independent ratings. Our investment manager rating from Augusto & Co. was recently upgraded from A- to A, reflecting our strong governance, risk management, and investment discipline. In addition, we have received investment-grade credit ratings from 2 separate rating agencies, underscoring the soundness of our structure and the resilience of our balance sheet. These milestones reinforce the confidence our investors place in us and our ability to deliver performance with prudence. We have remained sector agnostic, but our focus has consistently been on areas that build resilience: real estate, healthcare, infrastructure, consumer markets, financial services, and the creative economy. As the video highlighted, our approach goes beyond providing capital. We work side by side with the businesses we invest in, helping them refine their strategy, strengthen their governance, and achieve sustainable growth. Our investment model combines both debt and equity financing, allowing us to tailor capital structures to the specific needs of each company. This flexibility enables us to support growth while also generating periodic returns to our investors. We are able to deliver measurable outcomes within the defined investment cycles. This balanced approach ensures that our portfolio not only grows in value over time, but also produces steady, realizable returns along the way. MBO Capital holds majority stake in a number of companies that reflect our long-term commitment to building capacity in key sectors of the economy. Sterling Realty's development company, our real estate development arm, focuses on delivering high-quality residential and commercial projects that respond to Nigeria's urban housing and infrastructure needs. FCSL Asset Management, our financial services subsidiary, provides investment and asset management solutions that cater to both retail and institutional investors, expanding access to wealth management services. Through MCM Power, our power subsidiary, we hold a majority stake in Utilita Energy, a power infrastructure company focused on generation, transmission, and distribution of electricity. Utilita has made steady progress in increasing its capacity and is providing reliable power solutions to a broad customer base. Together, these subsidiaries strengthen MBO Capital's integrated platform and demonstrate how we unlock growth by building businesses that deliver essential services and long-term economic impact. In addition to our subsidiaries, we hold equity interests in a number of companies operating across high-growth sectors such as healthcare, consumer markets, commodities trading, retail, and entertainment. As you will have seen from the video, our investment in sourcing and produce was instrumental in helping the company unlock value. That growth reflects not only sound management and execution, but also the impact that structured capital and strategic support can deliver. In healthcare, our investment in AfriaCare demonstrates a similar approach. AfriaCare is building a platform that integrates hospital operations, health insurance, and preventive care. It owns Nigeria's fastest growing HMO and is constructing a 120-bed hospital as part of an ambitious plan to significantly expand its bed capacity nationwide to 3,000 beds by 2030. Our partnership with AfriaCare goes beyond capital. It is about enabling a model that improves access to quality healthcare for millions of Nigerians while delivering sustainable returns to investors. We have also made strategic investments in the beauty and grooming sector through the Lyrica Group, a fast-growing brand with strong customer loyalty and a growing footprint. With this company, as with many of in our portfolio, we don't simply provide funding and step back. We hold periodic strategy sessions, review their growth plans, and lend support from our own operational experience. It is part of our commitment to be partners in their success story, not just financiers. Of course, no journey is without its challenges. Our investments in Retail Supermarkets Nigeria Limited, the operator of ShopRite franchise in Nigeria, has faced significant challenges. Working capital pressures have affected operations and limited inventory levels in recent periods. However, we are resolving these issues and we expect a turnaround sooner rather than later. We have learned valuable lessons from this experience about supply chain, cost efficiency, and the importance of maintaining flexibility in challenging market conditions. These lessons will continue to inform how we manage our portfolio and evaluate future opportunities. In the creative sector, MBO Capital has played a leading role in bridging capital and storytelling. Through our film financing initiative, we have invested in more than 35 film projects. These productions have created an average of 150 jobs each and have been filmed in 10 states across Nigeria. Beyond the numbers, however, these investments represent a belief in the power of African creativity and in the global relevance of our stories. Taken together, these examples illustrate the breadth and resilience of our portfolio, from healthcare to retail, from agriculture to film. Our objective has remained the same: to back capable entrepreneurs, strengthen local industries, and create measurable value. Going forward, the next chapter of our growth will be defined by our determination to raise wholesale long-term funding in the form of debt and equity capital. The first phase of this is Project Legion, our 50 billion naira bond issuance program. Through this initiative, we aim to scale our investments in healthcare, power, and real estate sectors that are essential to national productivity and long-term economic transformation. Project Legion represents not only a funding strategy, but also a statement of confidence that with the right structures, African capital can be mobilized to scale to build African assets. We are also deepening our institutional capabilities, expanding our financial advisory practice, strengthening our ESG network, and working closely with our portfolio companies to embed sustainable practices that will make them more competitive in the global investment landscape. Over the course of today's sessions, you will hear directly from some of our portfolio companies, entrepreneurs, and management teams who are building extraordinary businesses in challenging environments. Their stories bring to life what partnership means at MBO Capital. In conclusion, to our current investors, I say thank you for your continued confidence and collaboration. Simply without you, we wouldn't be here today. To prospective partners, I hope today gives you an insight into the discipline, ambition, and integrity that guide our work. To our portfolio companies, Thank you for your resilience and for allowing us to be part of your journey. At MBO Capital, we will continue to invest in growth and remain deeply committed to Africa's future. Thank you very much.
Thank you very much again, Mr. Ordinary. Really not much else to say beyond that. The next item on the agenda is our keynote address. I've already given him a bit of an intro, but suffice to say that Dr. Abiola Edidipe is an economics expert, a corporate finance expert. He has over 44 years of experience. He's the founder of BA Consult. He's held a number of roles in both the private and public sector. He sits on the boards of both private and non-for-profit institutions. He's a first-class graduate of the University of Ife and also has a PhD in economics. So without much further ado, Dr. Edidipe, please join us. Thank you.
The MD CEO of MBO, Mr. Ogunari, the ED, Mr. Debi, the distinguished management and guests at this investor forum. I put forward first my appreciation to MBO for having me stand before this audience to speak to the theme of this forum, which is unlocking growth through impactful investment. Now, when I got this invite, I asked myself a simple question. Looking at the theme, first is the word growth, and then impactful investment. I said, okay, what I will do is just address four things quickly. First is to set the context, and then speak to growth, and then impactful investment, and conclude. So I will do that within the time. I also carefully looked at the program. I have 10 minutes, so I intend to keep to that. So thank you so very much. So my starting point in setting the context is to remind us about the world we live in. During COVID, in 2020, we began to talk about VUCA, all right? But today we say it's no longer VUCA. We live in a burning world. That is where the environment you do business and invest in is brittle. That means very fickle and breakable. And then it is also anxious, where everyone is not too sure about what will happen in the next moment. Especially when you look at the difference, a huge difference between Trump 1.0 and Trump 2.0. All right, two different elements. Of course, it's also an era that is non-linear, which means everything we have known in terms of making projections forward no longer work as we knew it in textbook or even in practice. So, and of course, an incomprehensible environment. So if that is the environment we operate in, then what does this suggest to us? And this is a statement I created about 3 years ago. Incidentally, in this very hall, on July 21st, became a key reference at a board strategy meeting for one of the international banks in Nigeria that I participated in. Short story. First half of this year, that particular bank did very well. They exceeded their budget for the first half year. So one of the directors challenged the management and said, does this not suggest that the budget we gave to you is too easy? Okay? So the head of strategy lady stood right where I am here and said, do you remember what Dr. Edidipe told us in January when we came here for our board strategy meeting? She now made reference to this statement. And I always remind anyone doing business, especially in Nigeria, to bear this in mind, that a mind that is trained to see opportunities will not surrender to or succumb, to problems. At times I put it as complain about problems, which means challenges, yes, we acknowledge them, but in the midst of challenges, there are also opportunities. So you then need to deliberately train your mind to identify opportunities. And of course, for that, You have a very good partner in MBO. Now, my next slide is a reference to, the best investor of all times, as we refer to him. That's Warren Buffett, the Oracle of Omaha. He said the best use of cash, if you can generate high returns within the business, is to reinvest it. Again, it puts MBO in my mind. So which means if you ever have any idle cash and you don't know what to do with it, hand it over to MBO. They will make it work for you. Now, I will soon see why I'm saying that. I'm not saying this because I'm at an event of MBO, but when you see CAGR that tells stories on its own, you understand why I said that. So my question is, why growth? Now, a growth mindset is the belief that intelligence, in fact, in contemporary economics, intelligence is a factor of production. All right? Intelligence, abilities, and talents are not fixed traits. They can be developed through effort, strategy, and learning from feedback. I mean, we had a lot of conversation, myself and Mr. Gudari, since I came in here. And of course, a lot of the things that they do at MBO obviously also involves feedback from not only investors, but also those they partner with. And that, of course, is refining, helping them to refine their strategy and then adopt initiatives that bring better results. Now, individuals with a growth mindset see challenges as opportunities, just as I just said. But they start looking at it from a conceptual perspective. So for such people, they see challenges as opportunities rather than threats, understanding that even failure is a part of the learning process. And I'll tell a short story. Many years ago, one of the business managers of IBM made a mistake that cost IBM $600,000. And so this guy was not fired. The then president of IBM, Ray Gessner Jr., was asked, why did you fire that guy? He said, well, it would be stupid of me to fire the guy. He said, why? He said, because the mistake he made that cost IBM $600,000, the guy learned the right lessons from it. And that is my perspective to learning lessons. It's not just about learning lessons, but learning the right lessons. He said, if I fired him, he will get a job elsewhere. Then whatever I learned from that mistake, he will apply it with his new employers. So I would rather keep him so that I can apply the lesson learned. Now, that is the mindset of a growth-minded person. So growth, again, we say, is never by mere chance. It is the result of forces working together. Okay? That's a statement credited to James Cash Penny. So now, going forward, and this is important, I always tell people this. When people look at the Nigerian economy, all they talk about are, challenges, problems here and there. Government is not working. Government, they are not really clear. They are not focused. They are this. I say, I agree with you. But let me tell you one simple fact about this economy. It has been growing steadily, especially since 2013. If you map 2000 to 2014, the Nigerian economy averaged a growth rate of 6.2%. If you look at the chart here, from 2013 January up until June 2025, you see that trend line, it trends upwards. That shows clearly that the economy has been growing, despite the two recessions we experienced in between. Now, what does that mean for you and I? And this is my own statement there. If you operate within an economy that is growing, and you are not growing, it means some entity or somebody is growing at your expense. That's what it means. So it then means that every day you wake up, you want to set for growth opportunities. And that is what this means. So rather than then complaining, it is growing too slowly. It is not growing as fast as the population growth rate. Well, it's growing faster than that at the present moment. So my challenge to you is that every day you wake up, behave like either a lion or gazelle in an African forest. Okay? A lion wakes up and says, if I must eat today and not starve to death, I must outrun the slowest gazelle. That way I will catch food. All right? A gazelle wakes up in the same forest and prays. I need speed to be able to outrun the fastest lion. That means to escape. All right? He now says, look, my friend, it doesn't matter whether you are a gazelle or a lion. Once you wake up, just start running. Okay? So that takes me to the final part of my address. And that is impactful investment. Incidentally, I've been involved in interventions variously by foreign governments and even locally here in the microfinance space in the last 14 years. So if you talk about impactful investment, that is where you really see it. Okay? Now, when it comes to investment, what is the primary purpose of investment? 3 elements we make reference to when it comes to portfolio investment. You want to preserve capital, you want to get competitive return for the investment, and you want to also assure liquidity. Those are primary, they are fundamentals. But now, when it comes to impactful investment, we say it goes beyond merely looking at portfolio investment. We are now talking about the 3 key elements of impact: economic impact, social impact, and then environmental impact. Now, in context, like I just mentioned, of microfinance, what triple bottom line means in microfinance is that, yes, just as I said, economic, social, and environmental. But the economic part is that you are intervening at the bottom of the pyramid, but you must remain profitable in order to be sustainable. All right? That's the economic argument for the triple bottom line in microfinance. Then, of course, social means social impact. Now, we've been partners with the German government in that space in the last 30 years. So, first they started by partnering with microfinance bank directly, and then shifted later to partnering with agric entities. And now the focus is on youth and then women-led businesses. So the idea then is that if we are going to make true social impact, we should focus on women empowerment, and of course a lot in terms of research in that area, evidence-based research, that shows clearly, and we put it simply this way: if I empower a woman in business, I'm empowering the family. If I empower a man, he may likely end up marrying more wives and then engaging in some ventures that are not beneficial to the family. What I said in this lighter mood way is actually evidenced in research globally. It's not peculiar to Nigeria or Africa. So when we now talk about impactful investment, we now move on and ask ourselves which areas, and incidentally the video we watched earlier, and of course the speech by the MBCO clearly speaks to them. Because I looked at this, let me look at what is happening on that side globally. Impactful investment, it speaks to energy transition, and that is an interesting one here happening. That's slide number 14. Energy transition, food security, environmental sustainability. Let me just give you something here about climate change. Because oftentimes we don't relate with the reality of climate change. There's something happened in August 2023. The Indian government announced a restriction to the export of non-basmati rice. When they did, rice became expensive all over the world. Not just in Nigeria, not just in Africa, all over the world. So I now checked it and I said, why? What happened? Okay, what led to that decision by the Indian government? And then why is it that rice became expensive everywhere? So 2 things. Monsoon rains in East Asia was very intense that particular year. In fact, the worst they had seen in 30 years. All right, the intensity of monsoon rains destroyed many rice plantations. And then India just overtook China to become the most populated country in the world, June of that year. Okay? Population of 1.428 billion people against China's 1.423 billion. All right? And so the position was that if we don't move quickly, largest population in the world, food security will become threatened. So we won't allow the export of non-basmati rice. But I now looked at the other side, the rice market. We normally use Thailand rice as the benchmark for rice price in the international market. I said, but why India? I now found that India supplies 40.1% of the rice we eat in the world. 40.1%. So that's also like the Ukraine war that had many appellations. You know where I started? Russia invasion of Ukraine. And then when Ukraine started flexing, they said it's Russia-Ukrainian war. Then later they said, look, forget about Russia-Ukrainian war. This is simply Ukrainian war. All right? When that happened, we learned our lesson. And we cannot ignore what is happening in other geographies. The climate change now, which is the connection to this, was brought to the fore by what Indian government did in August 2023. So if you look now, and that's my end notes. Now, why partner with MBO? And I gave 3 things there. Number 1 is if you look at the compounded annual growth rate, CAGR, between 2018 and 2024, you find that revenue grew by 91%. That's it. Thank you for that. It should be acknowledged. It's not common, it's rare. Because I'm a business analyst, so and I look at businesses within and outside Nigeria, globally. That is very rare to come by. But not only that, take a look at the balance sheet footing. That is the total assets. Okay? Assets growth was at 85% CAGR. That is also very huge by any standard. Okay? Which means if you are partnering with MBO, you have the right partner in terms of, remember what I said about growth. If you are not growth-minded, somebody somewhere is growing at your expense. So now, the second reason, I call it what I identified as the core competencies. But when I'm invited to speak at an event like this, I research you. There's one of the international bank franchise in Nigeria. I was invited to speak to their board. So I went on their website. Can I open an account on their website? I couldn't complete the process. So the first thing I said to them, immediately the chairman of the board said, let's stop the conversation. What the head of IT? So I also researched MBO. That's what I'm trying to say here. So if I'm saying this, it's not just copy. I researched it. And there are 3 things I found in the competencies. Now, yes, you see their documents. One is principal investments, and then there's also private funds. Okay? I addressed companies in the private capital space at an event, earlier this year in Nigeria. Private capital companies from all over the world, not just Africa. Okay? So when I looked at MBO, I could situate them in that context. And of course, advisory. Finally, what the promise? If you partner with MBO, the promise is growth, and that is, of course, taken care of by the track record that I shared with you. Secondly, I call it deep smart prioritizing. Okay? Deep smart means not only being aware of the environment, understanding the environment, but ability to identify where the opportunities are, and also positioning strategically for that. I call it deep smart prioritizing. Thirdly, smart choices. In which case, we will soon hear about the portfolio companies. I'm going to pay attention myself because I don't know much about those portfolio companies. But I'm very sure when they begin to make the presentations, we see why I said that they have the competence of smart choices. And lastly, value enhancement. Why invest if not for not only capital preservation, but to actually grow the value of your investment. In closing, I came across this recently, and I find it also interesting to ginger my brain and whatever I do. And it says, everything is going to be fine in the end. If it is not fine, then it's not the end. Thank you so very much. And have a wonderful forum conversation.
Thank you very much, Dr. Adidipe. And for those of you wondering, the enthusiastic applause coming from the right-hand corner of the room is by MBO Capital staff who are incentivized to say what they should. All right, so we've now come into the first of, so I think we're going to hear from about 7 companies, but we've broken it up into sections. So we're going to hear from the first 2 companies, Afia and RSNL. Both presenters have short presentations, I'll leave it up to them as to how much time they want to allot for their presentation, and then possibly to take questions at the end. Our first speaker is Mr. Tosi Rushewe from Africa.
Good morning, everyone. It's a pleasure to be here this morning to talk about the healthcare industry. Full disclosure, I'm not a doctor. I trained under Mr. Ogudere as a banker. Please don't ask me how I found myself here. Right, so next slide. Let's start with a very quick review of the context of the healthcare industry in Nigeria. So many of the facts we're all familiar with. And I'm sure everyone here has either had some not very good experience or they know somebody who's had not a very good experience with healthcare. And there are many problems. I'll start. The industry is hugely underfunded in Nigeria. We have 43,000 plus hospitals and clinics, so it's highly fragmented. There is no large structured healthcare business that is dominant in the way you would see in the banking sector, and you would see the commercial banks, First Bank, GT Bank, Zenith Bank, and they're very big, they're very large, they're very strong. The industry is largely unregulated or underregulated. So if you're a doctor, you can literally open up, a clinic in the garage in your home and put up a signage, Rushewe Clinic, and you start to see patients. And you add over time 1 bed, 5 beds, 10 beds, you employ a few nurses, and you start to see patients. What happens in there, it's very hard for anybody to see. And as a result of some of these things, we have some of the worst stats in the world. Nigeria has the second worst maternal mortality rate in the world, which means we're the second worst place in the world for a woman to conceive and have a child. We have the 5th worst infant mortality rate in the world, which means we're the 5th worst place in the world for a child to be born and to grow. And the stats there, of course, then affect life expectancy. Life expectancy remains rooted at about 55. If we could solve the problem of the children being born and growing up properly, life expectancy, I'm sure, would go up over 60. I could go on for the rest of the day, just talking about the problems, but that's not why we're here. We're here to talk about what we're doing a little bit differently. Afia Care was born essentially as an investment platform, investing in certain critical sections of the healthcare industry. We cannot do everything, but we have picked the sectors that we want to invest in. We're invested in hospitals. We're building 2 hospital companies, one for the lower income class, one for the middle income class. And they have to be separate brands because they're offering, even though ultimately the offering is standard and good health care, but the presentation of the offering is slightly different. One for the lower income class and one for the middle income class. We're building a health insurance business. In my previous employment, my colleagues and I founded a health insurance business in 2013, which very quickly has gone on to become the biggest in the country. We're repeating that same experiment we did in 2013, and we're trying to do it faster. So we have a leg in health insurance business. Diagnostics are critical to what the hospitals do, providing good investigations, whether from a pathology lab basis or from a radiology basis. So we have a diagnostics company. We are also invested in technology. The technology that is powering change and driving good healthcare, good customer experience. We're building our own technology, but we are also selling the technology to other healthcare businesses across. So this is really what we're doing. We're raising capital from investors, and we're deeply grateful to MBO Capital for being a very, very early supporter of this project. And we are also, grateful to the investors in MBO Capital for supporting MBO Capital, because indirectly they're supporting us. Let me see if I can figure out how this works. I will talk about our subsidiary companies in a few minutes. My colleagues and I have background basically from banking, finance, insurance, medicine, and technology. So I'm not going to talk too much about us. Right. So today we are investors in one of the largest private hospital companies. Our Jalad Hospital was founded in 1982. If I ask the question here, is there anybody here who was born in our Jalad Hospital or who has had a baby in our Jalad Hospital? It would be surprising if there is no hand up. Shall we try? Okay. There you go. There you go. Thank you, sir. Thank you, sir. This happens everywhere. When we were doing the acquisition of our Jalad Hospital, we found out that a lawyer who was doing the documentation was born in our Jalad Hospital, and she was pregnant. And she told us that as soon as we finished signing, she's going to go and check it into our Jalad Hospital because she was going to deliver her own baby in our Jalad Hospital. It's an amazing hospital founded by an amazing man, Dr. Ofushola Dipo. It's been around since 1982. Possibly one of the better run medium-sized hospitals that you could find in Lagos. So what we have done is to take hold together with Dr. Oladipo, and we have restructured the hospital. We have expanded the hospital from one location today. We have 3 inpatient facilities. We have 4 inpatient facilities in 3 different locations across Lagos. Bagada, where they started from, we are in Esolo, we are in Agege, and we have expanded their number of beds from 100 to 215. By the end of this year, we'll be in Port Harcourt, and we'll be close to 300 beds. Well, you heard Mr. Obudari, we're not going to 300 beds, we're going to 3,000 beds. So we're really just getting started. But beyond the physical expansion, of course, which costs money, it's more about the structure. Today, the hospital is amazingly structured. We have, where they did not have a single full-time consultant, we have 18 full-time consultants, and we are accredited to train house officers. We are accredited to train also residents, people who become consultants in family medicine. This year we've applied, we're likely to get accredited to train house residents also in internal medicine. And we're going to keep going between the 2 hospitals we're building over the next 5-6 years until we're training residents in 7 to 10 different specialties, which will make us essentially a teaching hospital. And that's the plan, because we have to build capacity. Our Jalad Hospital was also this year adjudged as the best private secondary care hospital in the country. The second hospital we're building is Oakwood Medical Center. In 2021, we acquired a hotel very close to Chevron. It used to be called the Oakwood Park Hotel. I'm sure many of us know it. We've been there for one program or the other. And we're converting it to a 120-bed general hospital that will be completed in the first half of next year. It's 120-bed. It's full-fledged general hospital, having all of the disciplines, 6 theaters, neonatal ICU, full ICU, accident and emergency care, dialysis, chemotherapy, etc., full laboratory, MRI, CT scan, etc. So this hospital will open next year, and the idea is that this will cater to the middle income class largely, whereas our Jalad caters to both lower income class and middle income class. The location is to serve the one of the fastest growing areas for middle income class people in West Africa. Bastion is our play in the health insurance space. We built Axel Mansard HMO, that's the one we started in 2013. It's done excellently well, and we're replicating the system. Here we're leveraging technology quite significantly. We only started in 2021. We will close this year with gross written premium of about 10 billion, and next year I think we will do that again. Dr. Adedigwe has talked about KEGA. The KEGA in Bastion is amazing. But this is important because without health insurance, really, we cannot solve the healthcare problem in the country. It's the number one problem that we need to solve. Less than 10%, just about 9% of the population in Nigeria has health insurance. We need to get that figure up to about 50% over the next 10 years for people to really, get access to healthcare. And we have a couple of other companies that I'm not going to talk about, the diagnostics company and the technology company. The technology company is building amazing things. Now we're doing 1,000, 2,000 telemedicine consults on a monthly basis. People don't need to go to the hospital. We have a telemedicine app called Octodoc, which you can download. So how have we progressed? We started in 2020. We started to raise capital. And we raised quite a bit of money over the next couple of years between 2020 and 2022. Right from the very beginning, MBO provided not just capital, they provided very significant support to the management team. They also provided advisory services in the sense that they were the ones that found out Jolat for us to acquire. And that's the very foundation of the business that they're running. So they have proven to be a vital partner, for us. In 2021, we did the Oakwood Park Hotel deal, and we also started to think about, expanding our Jolat beyond where they are. So we acquired Cooper Medical Hospital in Isolo. We converted it to our Jolat brand. We also acquired Aerom Diagnostics, which was a startup, small, very tiny diagnostics company, and we started to grow that, and we started to integrate that. In 2022, we opened a new 50-bed Arjolat Hospital in Agege, and we started to expand, by building small outpatient-only clinics, which we call spokes. And today we have in Bawala, in Bariga, we have in another area of Agege, we have one in Ikeja, in a mall in Ikeja. In 2023, we opened a brand new Arjolat Plus hospital, and that is in Bagada as well. So this is a ultra modern hospital, 26-bed, complete with ICU, which we opened the following year. And as I said, in 2026, we'll be looking to open the Oakwood Medical Center. At the end of this year, we expect to complete the acquisition of another hospital in Port Harcourt, so we'll be stepping out of Lagos. And in the medium term, I would say over the next 3 years, we will be in Abuja, we will be in Kano, we will expand in Lagos, we will be in the South. And there's a very interesting proposal we have from the South that will take us in one fell swoop, to maybe 2 to 3 cities in South. Why Afia Care? I think the story is very compelling from a growth perspective. Dr. Adedigwe again talked about growth. It's also very interesting from an impact point of view. Today, we are serving over 200,000 patients on an annual basis and growing. We have over 150,000 health insurance enrollees and growing. And the idea is that over the next 3 to 5 years, we will be serving over 5 million Nigerians, providing them with good health care, make it accessible and make it affordable to them. We're building scale, we're structured, so we're not the regular doctor who has come out of Luz or UCH and set up a hospital. We're a proper, structured organization with excellent corporate governance, have put in place excellent clinical governance. So the service we're delivering is high quality, but very, very affordable. We're broken even. Took a while, because when you put this kind of structure in place, it takes a while. And now we've created the structure, we've created the culture of excellence, culture of good healthcare. and we're now in a phase where we want to accelerate. So if you go to the next slide, we're raising a bit of capital now to take us into the next phase. We want to pay down some of the debts that we have taken. Borrowing in Nigeria at 35% is crippling. You don't want to do it. So we want to pay down some of the facilities we've taken. And we are expanding, as I said, not just in Lagos, but across, a few select cities in Nigeria. We are also about to acquire a pharmaceutical distribution company because it's part of the strategy. 60 to 70% of Nigerians access healthcare first by going to a pharmacy. So we want to put a pharmacy inside our group. And over the next 5 years, 6 years, as Mr. Ogudari has said, we expect to be not just one of the largest healthcare groups, assuming other people do something similar to what we're doing in Nigeria, but across West Africa. Thank you very much.
Thank you very much, Susi. I know you have another engagement.
Yes.
Maybe we can have about 5 minutes or so for questions.
Yes, please.
If you don't mind, I think I'll start. During your presentation, you highlighted the fact that you have this ambitious target to get to 3,000 beds by 2030. You can either build those hospitals or buy them. Can you talk a bit about that strategy, which you prefer, and some of the challenges you've encountered trying to do that?
So when we were putting up the plan for this business in 2018, 2019, our plan was to do 75% acquisitions and 25% greenfield. And that's because Nigeria has, as I said, over 43,000 hospitals and clinics. They're all subscale. They are all mom and pop shops. A doctor have come out, I built 10 beds, I built 20 beds. They're never going to last. As soon as the doctor, starts to get old, the place starts to die. So our plan is to try to put together a number of these hospitals very quickly and, build scale. But it's challenging because doctors treat their hospitals like their children. So when you come near, you say, oh, can we do a deal? It's like you are bomber, you come to come and kidnap their children. So it's really challenging, and we're having to now think that maybe we will change that split to 50-50.
Good morning, everyone. My name is Bumi Adeleye. I work with Retail Supermarkets Nigeria Limited, operators of ShopRite Nigeria. I have with me my colleague, Oduak Oko. He's the head of store planning and development. Currently, he's sitting as the head of operations also in the organization. So today, we just, we're recording because our CEO is unavoidably absent. She will not be able to do the presentation. So we are here, 2 people, heavy guys, to speak on what one person would have done for the business. So thank you. Let's just go ahead now. Okay, right. ShopRite Nigeria, that's what everybody knows the business as. But we actually internally, we refer to ourselves as Retail Supermarkets Nigeria Limited. Today, our footprint is very simple. We are in we have 25 stores across the country. I know that a lot of people will like, oh, ShopRite, because we have these huge consumers that are so emotional about this brand, and we cannot run away from the fact that we've been in the news lately, and not in a very good way. But today, I'll just take you through our journey so that you can have an understanding of where we're coming from and where we are going. So we have 25 stores across 14 states in the country. We also have a distribution center in Lagos that is about 4,000 square meters, where we have our warehouse. We have our Fresh Mark, the company that's responsible for our fresh produce, that's fresh vegetables and fruits. Also, Master Meat, the company that produces our meats and chickens across all our stores. So they are based in the DC. We started operations as far back as 2005. Those were the legacy owners. But in 2021, Nigerian institutional investors working with MBO Capital acquired the business. So from 2021, the company became truly Nigerian, owned by Nigerians. And since then, we've succeeded we have over 8,800 employees supporting these 25 stores across the country, and also an average of about 13 million transactions annually since 2021. We have a team of people. If you see where we're coming from the South African owners, before the acquisition, ownership was fully in South Africa. We had a leadership team. Everyone was based in South Africa, while in Nigeria we had just the people that were doing the operations across the stores. So between 2021 and 2022, the company tried to set up a management team in Nigeria. And our leader, the CEO, is Dr. Folakemi Fadahusi. And this is her profile. She's got over 25 years experience in finance. Before she became the CEO, she was our chief finance officer, and then she took over the affairs as the CEO about 2 years ago. Then myself, I have over 20 years working across FMCG, consulting, and of course, I've had opportunities to work with the Nigerian breweries as the head of procurement for some years. And also I worked in the Africa, Middle East operations across 6 countries, managing business development and ERP implementations across these regions. We have with us Udak, also, who has had experience across retail operations. He was previously the country manager for games. We know actually Walmart, Massman owned by Massman, and of course he was also the regional manager for East and West Africa. He was a degree in business management from the University of Cambridge. We also have 2 other people that work with us. We just want to showcase them here. Let's just go on. This is our stores today. Today, like I said, we have 25 stores with 17 stores that are profitable. If you look at the league of stores, we have 5 stores that are top performers. What it means is that sales revenue for these stores is higher compared to other stores. We also have at the bottom of the league 5 stores that are not doing very well, and we also have at the middle some stores that are due for what we call portfolio rationalization. Because ultimately the goal is for these stores that are in the middle to do as well as the top 5 stores. And the bottom 5 stores are being rationalized as we speak. So the last 2 you can see are already shut down. And I know that because of the emotional attachment we have with the brand, when you hear a store has been shut down, people get really very emotional. But the thing is a business decision. When a store is not viable, even when you have put in everything, you've done rationalization, you've done cost optimization, you've done productivity, and it's still not giving you that result. You need to make a decision so that the resources can now be used, right, to optimize other stores. We have quite interesting stories with how we got here as a business. I don't know if we can go to the next slide. So our current realities, it's what it is. I like the keynote where he spoke about the issues we have in Nigeria, that we can blame the country from now till eternity. While some companies are complaining, some companies are taking advantage of the opportunities in the environment and are doing very well. So, but we still cannot separate ourselves from the macroeconomy environment and the impact on the consumers. Because at the end of the day, everything you do, the consumer takes the hit at the end of the day. So the consumer purchasing power in Nigeria, we know how it has really affected a lot of things. But our current realities remains what it is. Liquidity and working capital squeeze. We have issues with our inventory, what we call the aging inventory, and of course suppliers, our growing finance costs, and the energy in Nigeria. How do I explain this? So as far back as 2021, when you make your budgets, you make your plans, you have this fantastic idea of what you want to achieve with your business. And within 2 years, we've gone through, as even mentioned in the last presentations, we've gone through a series of recessions in this company. Energy costs moved from 64 naira, if I remember very well, per 52 naira, 64 naira per kilowatt consumption to about 225 naira. And retail business is a battery of activities. We open our stores from 6 a.m. in the morning up until 10, 11 p.m. every day. So the fixed cost doesn't change. The renter remember when we took over the business, 14 of our stores were dollar denominated. So you know what that means for any business in Nigeria. So you make your plans, your 3 years, 4 years, 5 years, 10 years projections, and voila, something happens. And then you need to now go back to start thinking, what can I do with this? So within that same period, the good thing is that we were able to renegotiate some of our stores, but some we are not able to renegotiate from dollar denomination to naira denomination. That also has impact on our business. And of course, we cannot oversay this about what's going on. However, this has impacted greatly on our transaction count, even the average basket size. But when we see that, it seems to be higher, but we know that can be attributed to inflation in our environment. The good thing is, despite this, there was a need for a reset because the model we acquired no longer works. In fact, I don't think it ever worked in Nigeria. The South African model, it's kind of different from the Nigerian model. A typical example would be, in the past, South Africans were the aggregators of every product that we buy, right? You buy them. So even before you sell, you have already paid for the products. So you have stock in your stores that you may not even be able to sell, or you're able to sell. And over time, sometimes when you're stuck with these products, you don't know because you've already paid up front, right? And this over time has contributed to where we are today. Sometimes we have inventories that you can't even do anything with. But we've been able to look at that. There's been a kind of assessment to how did we get here, right? How did we get there? And with the help of MBO board, we sat together and re-evaluated the system and said the way forward is to reset this business. We shouldn't shy away from closing stores. And if you recollect, the time we closed, we say we opened Benin. In the same period, we opened Garden City. So it means that what we couldn't get from Adubayero in Kano, we were getting it from Benin. And what we are not able to get from Silverbird, we're probably getting it from Garden City in Port Harcourt. So the thing is that business, we had to just sit at a point in time and just decide we need to move forward. So that's the brief history I'll give about where we are today. I know a lot of people are like, what's going on? What's going on is, it has happened, we have these challenges. But like the keynote said, it said, you should see every challenge as an opportunity. We have clear plans in place. We have a turnaround strategy that will turn the business around in the next 2-3 months. It seems slow, but some people say in the office, the legend is back. We believe strongly that we'll take back our market share, we would gain back our consumers because we have very tight plans, very tight strategies that will enable us to do this. And with the support of our shareholders, because we presented these plans to them, they've given us feedback and they've given us how we can improve on the strategies, and we have done that and we're working on that. And we believe strongly that in another 3 months, maybe this time next year, when we all sit here again for this forum, we will be able to tell better news, better story about the business. So I'll hand over to my colleague who is.
So the story might not look very pleasant today, but we'll have a very clear understanding of what we need to do, where we are going, and what we are going to achieve. Part of the things we inherited was that we inherited these big format businesses that are in malls, very large malls, and modern retailers change over time. So what worked 10 years ago doesn't work now. So part of the things we're going to restructure the present stores we have into supermarkets and hypermarkets. So we'll bring in more ranges and more brands into our stores, working on store-in-store format, sales or return format, or whatever things we do. And also, we're going to bring in the neighborhood model. That's what our competitions are doing very well now, where they go into neighborhood, put in small stores, targeted customers. We have a clear plan on what we're going to do. We've got a format between 600 to 1,000 square that's going to convert into that market. Also, what we're going to do too, we're going to segment our business into different categories. We want Delhi as a department where we want the biggest bakery you can ever think in Nigeria. Because each of our stores has the biggest bakeries you can think of, but we'll not harness it to optimum. So we're going to drive bakery as a brand. Where not only are we going to target our stores, we're going to target the HoReCa business. We have Delhi as a brand too. We have the biggest kitchens in our stores, never harnessed, never used properly. We're going to run a different business model on that. So we're very clear on our strategy going forward. So what will be the impact of this? I'll leave the first one for my lady colleague to talk. She likes talking about women, so let me leave it. I know one of the things the keynote speaker said was that you need to be impact investment. So let me leave that one. She'll talk about that. We're going to help SMEs to grow. We have the biggest space that you can ever think of. We have about 50,000 square feet in our malls all across Nigeria. Other retailers don't have this. So we're going to help SMEs to go into our business, advertise their product, put them on our shelves and sell. We do that now, but we intend to work with a lot more SMEs to do that. We're going to strengthen our agri value chain. Today we own Freshmark. We work with over 100 of farmers. We teach them how to grow crops. We take those crops, the supply was only, we take them to our Freshmark office at the Solo. We prepare them, prep them, and we put them in our stores. It's a separate business we own today. So we're going to deal with more farmers to ensure that we grow a lot of this brand, helping local farmers to grow crops, produce, import, do what we need to do, put them on our shelves and grow our business and agri-value chain. We started the Q-commerce business. We realized that a lot of our people in Nigeria, because of the middle class growing, we work longer hours. So we started our Q-commerce business. We want to evolve into e-commerce where people can shop directly from ShopRite platform and then we'll deliver them to their houses. And also we're going to launch ShopRite Marketplace, where people can, other retailers, SMEs can put their products on our platform, sell through our platform, and then make money while we make income. So these are very clear strategies we have in place to grow. Let me allow my colleague to talk about the gender inclusion because she always loves talking about women.
So you're being biased. So, like I said, we have a clear strategy to turn around this business. It's 6 months. You just explained it. If we have to talk about strategy today, it might take the whole day, but the truth remains that we have a 6 months to 22 months turnaround plan that will turn this business around because we've been able to identify the big opportunities we have as a business. We still have the anchor tenant advantage across all the states that we are. He also mentioned that we have the biggest deli infrastructure and bakery in this country, and we want to leverage on that, right? In addition to that, we believe that gender inclusion is a thing that we can never talk about enough as a business. So last year, during the Women's Month, we started what we call the Women in Retail. You know, it's funny, if we hear that today, we have 56% of our workforce is actually women, surprisingly. When the keynote spoke about impact businesses, it's actually got, well, we're not doing badly. And if you look at our management team, the CEO is a woman, the CSO is a woman. And if you go to our stores, between 2021, when MBO Capital led the acquisition, we used to have all the stores, used to have store managers that were men. Today, we have female store managers because it's supposed to believe that women cannot work till 10 p.m. although they run shifts. surprisingly. And if you look at all the stores that we Ikeja store is a lady. Her name is Kehinde. So our key store, our top 10 stores, we have 6 women in those stores. So we have deliberate policy to encourage women leaders in the organization. We also have a deliberate policy to encourage women SMEs. I know that we have a deliberate strategy in the sense that today, despite all the challenges we are going through with suppliers, our female suppliers are a bit more advantaged because we even have partnership with banks to make sure that we sort out the women business owners first before the men. And like the keynote said, when you educate a woman, when you empower a woman, you not just empower her family, not just her community, but the larger society. So we're doing a lot with respect to that, and I believe there is more to be done right around that angle. So I would like to talk about our store formats and growth areas.
I think we've highlighted that a little bit. We go into those different formats that we mentioned. We're very clear on what we want to do. So the story might not look good today, but we're very sure where we are going. We're very sure the direction we are going. I will never repeat what happens today. So the truth is, ShopRite is going nowhere. In the social media, people are saying it's going to die. They will sell it off. No. MBO Capital, one of our strongest partners, is fully behind us. There's clear strategy on what we need to do. We'll get out of these problems. We'll evolve bigger, evolve stronger, and we'll expand into 100 stores that we plan in the next 6 years. That's the story.
Thank you very much for that. Does anyone have any questions? Yes, please.
Hi, morning. Thank you for the presentation. I wanted to ask a few questions, so permit me. I want to understand from a management perspective, how long it's taking you to sort of think of these pivots. It seems like from 2021 to date, it's been 5 years, and a lot has changed in that period. And what you've had a stronger player like Boku who has emerged and essentially taking a big share of the market. Now, one thing I struggle with today is I know that people who are looking to come to this space, they're struggling to get store infrastructure. So people can't actually find shops because Boku has essentially, picked up all the, viable property. So the question is, even if you choose to grow at the speed you want to grow, where do you expect to find the infrastructure or the building? Because essentially, if you want to start building and you get to find the land, the time, it's going to take a bit of time. So what is that strategy around being able to grow as quickly as you want? Number two is sort of how do you intend to build back supplier trust? So there's been a lot of delayed payments for suppliers to ShopRite, and a few of guys have said, they're not able to supply ShopRite anymore. So how do you want to build back that trust, and how long will it take you to do that? And thirdly is, how are you hoping to solve the liquidity issue, which is sort of fits into that supplier trust. And then obviously the last question for me is always the margin outlook. We've seen, margins collapse aggressively in the FMCG space. I think margins were as high as 10% maybe 5-6 years ago. But what you find now is with all these new players, with the technical system, margins are sort of collapsed to like sort of 2%. So with an environment where cost is aggressively increased, how exactly are you looking to run a sustainable business going forward?
Thank you. Let me start from the expansion strategy. What we're talking around today is something we've done in the last 1 year. So we have a very clear plan on how we want to move. But when we're talking about business model, Boku's business model is totally different from the other business model. It's for the low-income customers. It's a price-sensitive business. We run on very thin margins. We don't think the mall business is going to work. There's a lot of malls. A lot of people are not building malls anymore. But what we are thinking of, we're going to start owning standalone stores. We started having discussions with property companies already, where they're going to, based on our store location strategy, we've done that. We know exactly where we need to put our stores, the locations we need to put them. We're going to build stores based on space availability. So we'll go as far as it is the 500 square meter squares we have, we're going to put a store. We'll have a 700, 800. It's not going to be a copy and paste model anymore. So that's the strategy. Working with some companies, I don't want to mention names here, already who is busy sourcing locations for us, we're busy discussing the terms of how they want to build, and we're going to make them energy efficient and cost efficient, where we run with solar, so that we reduce the cost and use energy efficient equipment. That's how we want to expand. It's a gradual thing, but we have very clear strategy of where we want to go and how partners we are going to work with. And with MBO Capital support, we're sure we are going to get there. The second thing you mentioned about suppliers' confidence, we know. We've lost the trust of our suppliers, we know. We've had meetings with the suppliers, we've met with them one-on-one, we've gone to their offices with the management team to have discussions with them. We've had very clear decisions on how we want to do based on what we agree with the suppliers. They're well spelled out on how we want to move. We know how to build that trust again. Either we need to give them bank guarantees or whatever we need to do. We have these discussions with suppliers one-on-one, and then we know what to do going on. Are we going to pay off all our suppliers? Yes, we are going to pay off all our suppliers. It's very certain we're going to clear them. Are we going to deal with all of them? No. There are some that we might not deal with going forward because we need to deal with manufacturers and direct owners of brands. So that's how we want to build that trust. And there's a whole lot of marketing campaign we put in place to do this. As regards the margin, ShopRite initially only placed in the grocery section. I talked about restructuring. We're going to go into lifestyle, a lot into lifestyle. We're going to go into a lot into electronics, clothing, different brands of business where you have high margin that can help you cushion the effects of margin on groceries. We have the space, we have the luxury of space in the malls we own today. So we're going to diversify our business into different formats where you can see a lot more products, a lot more SKUs, not just grocery, but in other sectors of the economy, in other business or in other ranges and brands, where we'll be able to up the margin there to cover up the lost margins in grocery. So all these are clear strategy around how we're going to handle each of this, and we know exactly where we are going. Thank you.
Thank you very much, Brad.
I just want to say something about Boko, because I work in strategy, and I can tell you for free, we don't actually see Boko as a competition. It seems like pride, but it is not pride. Boko is positioned as a discounter. We are a supermarket, hyper supermarket. Boko is only in Lagos. We are in 14 states in the country. I understand competition is steep in Lagos because we have Boko, but the target audience of Boko is not our target audience. We will not run away from the fact that we have had challenges, right? But we don't really see them because if you look at our top competitors, Boko doesn't come near. We have other supermarkets that are actually our competitors, but not Boko. So we have a response to Boko. Because if we say we want to have 100 stores in 3 years, it means we have a response for Boko. But in the meantime, we want to build back our supplier trust. We want to get back our consumers. We want to fill our stores with stock. So that's our primary focus now. And we have a clear plan of how we intend to achieve that. And of course, with time, over time, you will see this happen in the, whether through news or by visiting our stores. I would just say you come to any of our stores around the November, December this year, you will see changes. Thank you very much.
Thank you very much. We're going to switch tracks a bit, and the next item on the agenda is a panel discussion based on essentially what we're doing in the creative economy. I have to speak about this a bit. The creative economy in Nigeria is such that it really demands its own event. And if you were with us in April, we had such an event focused on film financing, and the response to that event was actually very promising. And we're planning to do that event on an annual basis. I see some faces here that were at that event, and the creative economy for me is probably one of the things I'm most proud about what we're doing at MBO Capital. Julie mentioned it earlier, we funded about 35 movies to date. Well, 23 are out on streaming platforms. The other 12 are at various stages of development. We just, as of Tuesday, got IC approval to fund a Hollywood movie set in Nigeria. When I say a Hollywood movie set in Nigeria, I mean Hollywood producers, Hollywood actors of Nigerian descent coming to Nigeria. It's the largest budget we've ever done for a film before. Very, very exciting. My colleagues in the corner are there's no style review this year, don't worry. Very enthusiastic, but we appreciate it. And no, just talking about the creative economy, films is probably the biggest thing, but at MBO Capital, we have dimensioned Nigeria's creative economy into 6 sectors. Film, TV, and digital content. The panel that we're going to have now is going to be about that. But there's also music. You can't go anywhere in the world today without hearing Nigerian music. There's theatre arts, there's fine arts, and then the last 2, fashion and food. We've just done, or we've got an ICA approval for our first fashion investment, and our pipeline is literally bursting with opportunities to do more films, more TV. We've actually also gotten our first ICA approval. In fact, we dispersed yesterday for a TV series that will be on Netflix, produced by Ghanaians, but covering sort of Nigeria. It's called Ikoyi, so you can imagine what that's going to be like. Anyway, my colleague Fola Jimmy is going to lead the next panel, so I'm going to invite him up here to introduce his speakers.
Good morning, everyone. To discuss opportunities in the film space, I'll be joined by 2 subject matter experts. The first is Ladun Awobokun. Ladun is a content executive with over 15 years of experience driving growth across film distribution, market research, and streaming in the African creative economy. She serves as the Chief Content Officer at Film One Entertainment, where she leads the group's content strategy, spanning development, production, licensing, and aggregation. In July 2025, she also took on the role of Head Content Acquisition at Kava, the next generation streaming platform dedicated to amplifying African roles for global audiences. At Film One, she leads the group that represents the theatrical interests of Walt Disney, Sony Pictures, and Warner Brothers across Anglophone West Africa. Under her leadership, she's distributed over 90% of the highest grossing Nollywood titles of all time, including all 3 films that have surpassed the 1 billion naira mark. She also oversees Film One Studios, the production arm of the Film One Group. In addition, Ladun serves as the editor-in-chief of the Nigerian Box Office Yearbook. Ladun Awobokun, everyone. Round of applause, please. Joining Ladun on stage is Asaf Oluseyi. Asaf is an award-winning Nigerian film editor, producer, and founder of Asaf Films Limited, a Lagos-based production company focused on telling Pan-African stories with global reach. He's widely recognized for his bold storytelling style and impact-driven cinema that bridges entertainment and social commentary. His debut feature, Hakunde, has become one of Nigeria's most successful independently released films, winning multiple awards and achieving distribution across streaming platforms, in-flight entertainment, and global festivals. Beyond filmmaking, Asaf advocates for new funding models and co-production frameworks that empower African creatives and attract institutional capital into the continent's entertainment ecosystem. His work continues to champion the business of storytelling, building bridges between art, commerce, and social impact. Asaf, please, can you come to the stage? Asaf's latest film is called 3 Cold Dishes. It's executive produced by Burna Boy and co-financed by MBO Capital. It's a Pan-African thriller that was shot across Nigeria, Benin Republic, Mauritania, and Cote d'Ivoire. Last week, the film had its premiere at the Indigo O2 in London and has been selected as the opening film for the Africa International Film Festival, taking place next month. We actually have a trailer of 3 Cold Dishes, which we'll screen now.
Look at us. We've given everything. You are still taking. We have got nothing. But don't you think that this is over now? Open way.
3 Cold Dishes, the official trailer, drops in 3, 2, 1. Wow.
In 2002, the girls came to Eagle's Lair in Marcory. But you could tell they didn't belong on Sober streets.
Are you trying to escape?
Some of us did.
Tu n'as pas essayé de t'enfuir il y a 2 jours?
I know I did.
Et tu as vu comment ça s'est passé pour toi?
It was the school or the hood. T'as mal aux jambes? Ou alors ça vous trop dans ta culotte?
Leave her alone.
Oh! Je ne veux pas rester ici.
Tu ne peux pas retourner au Mali. Tu ne peux pas repartir. Je reviendrai te chercher. Je vais m'occuper de toi.
And I promise, I will repay you.
Comment veux-tu continuer à bloquer? Par le feu, l'eau ou par balle?
If we stick with the plan, we can have them here in 72 hours. Lagos to Benin and then back home.
Elles sont toutes dangereuses.
We bring them here to kill them.
You are not murderers.
Pourquoi l'enlèvement d'un pasteur? Pour prier pour leurs péchés.
Prends ta vieille voiture, j'en veux même pas. Prends-la, allez.
Okay.
You're being reckless. Look, we don't get in the way of your drug shit, but this is gonna cost us.
Push! Inside!
Let's go! Where's my brother?
He lives with me. He's my boy. I have raised him. I have raised him.
But you had time to keep this in your hearts?
It's not about time. It's about reason. And there's 3 of them.
Will be released in cinemas in Nigeria on the 6th of November.
7th of November.
7th of November, okay. Okay, so Asaf, I'll start with you. For 3 cold dishes, they're releasing in 26 countries across Africa, Europe, and I think North America. Internally at MBO Capital, we always say that for Nigerian films to be truly successful, they have to travel beyond Nigeria. So can you talk a little bit about the strategy for releasing in those different countries? I know you've been on an international press run building publicity for the film. So can you just tell us what that reception has been like and what you're hoping to achieve by releasing in all these different territories?
Good afternoon, everyone. Firstly, it's based on what we're trying to create with 3 cold dishes. I think Nollywood is, across all industry, Nollywood is huge. We've conquered Nigeria. And from my research during the release of Akunde, what I noticed across West Africa is that they consume a lot of Nollywood films, but that are dubbed in French. And most of those films are old Nollywood films, not current Nollywood films. So what I see in theaters is you see new Nollywood films that are English-speaking films being distributed in those regions. I felt if there is consumption on TV for old Nollywood films, it means there is an appetite for our stories in this region. And with what Nollywood has done in Nigeria, can we replicate the same thing across West Africa? Because we only have 2 countries that speak English in West Africa. Like more than 10 countries across West Africa speaks French, right? And there's some countries also in the northern side of Africa that speaks French. Can we change landscape if we kind of have a film that has English and French language? And that was what birthed the curiosity for 3 cold dishes. We delved deeper in research and realized that just doing an English and French Nigerian film is not enough. There is a place of representation in anything. People want to see what they look like. People want to hear the kind of sound and flavor that sound like them. French is French, but there is, just like we have Nigerian English, we have the Pidgin, we have the outside English, we have French have different flavor. The Ivorian French is not the same thing as the Benin French. So how do you conquer this in presentation? The easiest way was to now have actors in some of these key. In our research, we can't target all French-speaking West African countries. So what we did was to find the central key market that has huge cinema consumption, like their box office is decent. Right? In the country of choice was Cote d'Ivoire. So it means we have to have actors in Cote d'Ivoire. And same thing for Senegal. And Benin was close to Nigeria. We also have to have actors in Benin. So these were like the key strategy that we put in place to kind of now build this that we call a Pan-African film, which is now a Nigerian film, but also, as much as it's a Nigerian film, it's also like a French film with actors across West Africa. And that gives us, and we shot it across West Africa as well. So that gives us opportunity to distribute this film in all of this region as much as we want to distribute in Nigeria. Yeah, and the goal is it then helps us in our projections to have realistic projections. We know what our films can do in Nigeria. In the last 12 months, or in the last 24 months, an average Nollywood movie has grossed between 300 to 500 million naira. In CFA, that's about 150 million CFA, right? Can a Nollywood movie do more than that across region if it's seen as an African film with representation in some of these other key markets? The answer is yes, because you're now targeting 10 different countries as opposed to just one country for revenue generation across theatre.
Okay, thank you. Lanu, Filmon is distributing 3 cooked dishes, not only in Nigeria, but in a few other
across all
African
Anglophone countries, yes.
Do you have anything to add to what Isaac just said?
First, good afternoon, everyone. Thank you very much for having me today. First, it's a very bold move. I remember the first time that we spoke to Asaf about this, I thought, ooh, really crazy, but I recognize and I salute that. To release a French film, because if you watch the film, it's very French. In Nigeria, it's a bold move, right? Because our audience is very peculiar, it's very segmented, especially when you think of cinema. But especially with the positioning and how it's been shot and the genre, I would say, that is what really connects to. So the genre is what really connects to the regions that don't speak French. So it's one of those things where it's a risk, but I believe it's a risk that will pay off, and it has already started paying off with the international releases that have started. It's shown in the UK. It's going to show. We're showing it in Francophone Africa. It's also showing in Francophone Africa, etc. I think that it's a bold move, and it really showcases where Nollywood is at the moment and people taking those decisions. Because again, one of my favorite words I've been saying recently is global. So when you're shooting film for both the global and local audiences, this is an example of something that's global, and I believe that it will.
Okay. Just staying with you, Ladu. One of the things internally we find very useful is the Nigerian Box Office Yearbook, which you are the editor-in-chief of. Reviewing the Box Office Yearbook for 2024, we noticed there was a drop in cinema numbers in Nigeria. But in 2025 so far, there's been an uptick in cinema numbers. What do you put that down to? Is it that we are making better films now? Are we marketing them better? Or are people, we know Netflix and Amazon Prime have changed their strategy for Nigeria. So are people getting more ambitious in type of films that they're putting out there? Is there any sort of light you can throw on that?
Yeah, it's definitely a mixed bag of things, some of which you've said, right? We haven't had an increase, so to your point, year on year, we're up on admissions by 26%. Now, that hasn't happened in the past 5 years. And it's something that we're proud of, that it's even happened, especially because the number of cinemas haven't really gone up. Maybe we've had 2 or 3 cinemas open this year, which is the smallest increase of cinemas that we've had year on year over the past 5 years post-COVID. But it's a few things. So there's the streamers that have changed strategy, which means that a lot of people that perhaps we're waiting for this big streamer splash are thinking, I don't want to tie this money down, I'm going to bring it to cinemas, which then has made sure that the content that is coming to the cinema is superb. And then it's also the fact that cinemas have now become a lifestyle choice in cinemas. I remember when ticket prices started to go up, so year on year again, September to September, ticket prices are up 30%. And people are like, oh my God, I remember seeing the Twitter thing of thinking, who is going to pay 10,000 naira in cinema? Who is going to pay 8.5 in cinema? And to see that folks are complaining, and I mean, all of us are complaining with what's going on just generally, right? But folks are complaining, but understand that, well, with everything that's going on, prices of everything have gone up. The fact that it hasn't affected admissions in a year that there's a 30% uptick in ticket prices and we're still recording a 26% uptick in admissions, I mean, it has to be the content. So you cannot say lifestyle decisions that people have made. People now like to go to the cinema. It's a valid Thursday night option if I'm coming from work, or Saturday morning, where people are like, oh, I've had a busy week, I'm just going to walk to the IMAX and go watch a film. There's that, but it's also the content that's come to watch. We've also seen that this year so far, Nollywood and Hollywood are tracking 50-50, which is something that typically doesn't happen. Hollywood usually has like a higher affinity for it. Or what we saw in February, for instance, where Captain America and Timini's Real Love were literally going neck on neck. That's not something that happens, but it's something that that is lovely to see, especially when local content is standing up.
Okay. Is there anything to add?
She's got the data for the cinemas. I'm just a consumer as well.
Okay. Okay. Moving beyond the cinema now. The other thing I'd just like to touch on is streaming. I mentioned briefly Amazon and Netflix have changed their strategy for Nigeria. And one thing you hear when we talk to filmmakers or executives in the film industry is about how we have to be able to amplify our voices. If we leave it up to Netflix to determine what gets picked up, it will stifle our growth. There's always this idea out there that we have to develop a local streaming option to challenge the international streaming options that exist. And so in that vein, Filmon, in conjunction with Inkblot, launched Kava streaming platform, So can you just touch a little bit on what you're hoping to achieve and what the response so far has been to Kava's release? Just from my perspective, I've noticed an attempt to build the platform organically. You are almost sort of deliberate about how you release, when you release, making sure you release titles that resonate with the audience. But is there any sort of insight you can tell us about the thinking behind the launch and what the reception has been so far?
Yeah, thanks for that. So Kava launched August 22nd. We're very proud of it. Again, we saw an opportunity there where there was a lot of content. There still is a lot of content that is fantastic, but still don't have homes, right? We really believe, if the cinema has taught us anything over the years, is that there are people that are coming up for it, and increasingly. And in fact, over the past 3 years, if you look at what the other streamers have done, the global streamers have done, they have made it more attractive. So they've made the Nollywood options, whether it's series, whether it's movies, more attractive. Really, actually, we're riding on that and saying, okay, we believe that our content is peculiar, we believe that it's special, we believe that there's a community for it locally and in diaspora. So we partnered with Inkblot, who we've done 14 films with over the past 10 years, and we're marrying what we're good at in this JV, right? We've seen tremendous tremendous subscriptions, especially from the diaspora, UK, US, Canada, and in Nigeria as well. Our model generally is just getting the top and most promising or very attractive films. We've done the cinema model for the longest time. We do not believe that cinema and streaming compete. We believe that they complement each other. There are many people that go to the cinema for the experience, or because one of what people say about cinema is that you go there to escape. It's the sound, it's popcorn, it's shawarma, now small chops in cinema. But there's some people that don't want to leave their houses, they want to watch at home. So we believe that they complement each other. So we're saying, okay, you want to watch in cinema, it's there. A few weeks after, there's a window that the cinema exhibitor associations and film distributor associations have for films that go to cinema. We wait for the cinema to end, and then we would have it on Kava, or any other streaming platform, depending on what it is. We're doing it organically. Why? For now, and with plans, obviously, of moving this further on, because at the end of the day, if you want to play on the global space, which is where we are starting to play at, you do need liquidity like that to scale, right? So we're saying we want to have our case set up. We want to have it such that you can't argue with the numbers. The numbers are the numbers, and we're already seeing it. So we will get to a position where perhaps we'll be sitting down with you and say, okay, MBO Capital, let's talk about infrastructure. You've invested in all these films. How about supporting infrastructure that helps this distribution message just go around? If you look at America, Netflix, Roku, Tubi, Amazon, and all of these are coexisting. Why do we only have 2 international or 3 international companies, of which all of them are US companies? When is someone going to look at local or domestic infrastructure and say, let's support this?
Yeah, I think it's very important because distribution is essential to how we look at investment opportunities. And one of the questions, when we're talking to filmmakers, we ask them to demonstrate competence in 3 main areas, one of which is distribution, and partly because of what you've just said. And for many filmmakers, if you don't get that Netflix licensing fee or licensing from Amazon, there's almost no other outlet. So it's very important for us to have alternatives where filmmakers feel like they can have other avenues to distribute their films. Just wanted to ask for Kava, would you be only licensing, or are you also producing movies specifically for the platform as well?
Both.
Okay.
Producing, working with producers as well to produce that, and also licensing already existing content. Again, it's for African stories. We're not diluting it at all. We're not doing like Indian content or any other thing. We're sticking strictly to African and working with producers in that ecosystem.
And Aesop, just from a filmmaker's point of view, what's your take on having local options available for streaming your films versus the international options that exist?
I think it's just the addition of options that you now have, right? Prior to now, it's always, let's go to Netflix or let's go to Amazon. Now we have Kava, you have Showmax, you have quite a lot of local options, and they're not, the advantage of streaming platform is that it's not limited to a particular region, a particular country. It means that any Africans or any Nigerian diaspora or anybody that is just curious enough to want to watch or consume African content can consume this content and reach it, like they can access it at any given time. So I think it's the plus of option that we now have as producers. I think that's the joy of a platform like Kava for us.
And the other thing I wanted to add, we know Netflix will now mostly license Nigerian content for an African audience. So I think there's an opportunity there for a local streaming platform to provide
to be on Netflix and also be on Kava.
Yes,
because
exactly.
Now you can just geoblock for the rest of the world.
Yeah,
you can still
because I know some Nigerian titles on Netflix, Nigerian diaspora don't have the opportunity to watch
Nigerian titles.
So there's room for another player to strive. Okay, and just moving on further beyond cinema, beyond streaming, monetization generally, and I would ask this for you, Aesop. What other avenues are there for monetizing your film content? So I'm thinking of things like merchandising or airlines, things like that. Are you exploring any of that for 3 Cold Dishes?
For 3 Cold Dishes, I released Akunde in 2016, and it was my first film, so that gives me opportunity to play, like kind of explore disruptive ideas. We did campus tour, we did community screening, we did theater, we did streaming platform. We made our biggest money from campus tour, funny enough. Yes, because we were able to, I see film as a tool, which can serve multiple purposes. It can entertain, it can serve as a PR spot, and it can educate. So in creating, if you can serve multiple purposes in creating that product, it means you can distribute using this different avenue. For like Akunde, it was an unemployment story, and then the end of it is that it tells the story of you look around Nigeria. The more you complain, the more problems you see, is also the more opportunities you see. At the end of the day, someone is going to create solutions to those problems, and if you can be the one, you can monetize those solutions. And that helped in distributing Akunde in campuses. And when we look at the revenue generating modules that work for Akunde, we said, how about we recreate the same modules in distributing 3 Cold Dishes beyond just distributing it across African countries. Beyond going to theaters, what other things can we do with 3 cold dishes? We created 3 cold dishes to serve not just the entertainment value, but also the social impact value, which is the story of trafficking. The story of trafficking is based in awareness, right? That's what the film is serving. There are budgets year in, year out for awareness program on trafficking. So if you go to agencies, most of them always do like a gathering, like a room like this, and just speak and speak and speak. And in most of those rooms, the potential victims do not have access. Most of them are in communities. And so we thought, what can we create? How can we add to and gain access to the pool of resources that is available for awareness? Let's create a movie. So if we create a movie, we can distribute the movie to theaters. When it's done in theaters, we can take the movies to campuses, right? We can do free screening in campuses, like the state and federal campuses, funded by the state or brands. We can go to private schools and do private screening within campuses. In fact, most of the private school already have like the media, like the infrastructure to play back movies on campuses, and we can actually charge for private units because most of them don't even get access to go outside to go explore entertainment experience. So taking a film that is current, just leaving theater to campuses could drive some numbers in. And then for the community screening, we can go to the agencies. We had intention of doing invite some of these consulars from embassies who has resources for awareness program, do like a gala, and then tell them we're doing about 20 to 30 community screening, and get them to adopt those communities and fund the screening of these films in those places. And then beyond community screening, yes, the other traditional models of AVOD, VOD, and in-flight, the options are broad, but for us, these were designed prior to even creating 3 cold dishes. We saw it, we see the system like a football team. So every team's success is not based on one player. So what do you have? You have a Pan-African story. You have talent from different African countries, shot in multiple African countries, and then backed by the biggest musical icon from Africa. It means the project can be exported to every possible space where people would love to see a Nigerian title or an African title. And for all of these channels, we are exploring.
Okay, thank you, Asaf. Lastly, just to you, something Asaf mentioned, community cinemas. And it's something I've heard a lot of people speak about as an alternative to traditional cinema, because again, of some of the things you mentioned, cinemas are expensive and all of that. Do you see community cinemas as a challenge to traditional cinemas, or do you think there's a world where both can coexist? And if they can coexist, do you see them as taking food off your table, as it were? Because I wouldn't imagine that community cinemas will form part of your infrastructure. So what are your thoughts on that? Explain, please.
Okay. No, certainly not a challenge. I think that the only way we scale, because you look at keynote speaker actually mentioned India, and it's one of my favorite countries to explore when I think of where cinemas can grow to and where entertainment, especially for local productions, can grow to. Community cinemas is how we scale, whether we like it or not. We have a very, very fragmented demographic, if I can call it that, of people. People complain about 8,500, 10,000 naira tickets because for most people, if we're really being honest, it's too expensive. So how do you get people to see it? It's to get a way that you can sell cheaper tickets. That only happens at a community cinema. You cannot spend 500 million naira, which is the base level for building a 3-screen cinema in Nigeria if you're doing a complex on your own and you're renting, and then now charge tickets at 2,000 naira. However, if you were spending perhaps 100 million or 70 million in getting a 2-3 screen cinema setup, and you didn't have to do these HVAC, and you could get GRI or somebody to sponsor your ACs, then you could do a community cinema, and that's what it is. So it's how you scale. It's also where I think film and tech marry. because we have a big piracy problem in Nollywood, in Nigeria as a whole. And the only way a producer like ASOF will be comfortable with me saying, I'm taking your film to Ojo because there are 300 people there daily waiting to watch your film, is if I can tell him that that film can be protected and it won't be pirated. That's where tech comes in. So no, certainly not I think it's the way forward. MBO, you guys should be looking at that.
So you think, because the reason why I said will it take food off your table is because I imagine there would be other smaller players driving this community cinema initiative. So is it something Film One can also play a part in?
Film One, no, but Film House, yes.
Okay, yeah.
From a content point of view, that's Film One, Film House is the cinema, part of it. So from an exhibitor part of it, to the extent that it works with our general model, of course. And it's something that we've explored, is the reason why I spoke about tech. So it's something that we're working through to see how it works for us. But 100% community cinemas is the way to go.
Okay.
It's definitely something that adds to what we already have right now and not competition.
Okay, all right, thank you. I don't know if there are any questions from the audience for Ladu and Acer. No? Okay, if there are no questions, just to thank Ladu and thank Acer for joining us. Thank you very much.
About our experience in financing films, and the conversation has also sort of informed that as well, because we also realize at MBO Capital that if we're going to take this further, we're going to have to do other stuff beyond just financing film. We made our first film investment in 2017, and it was an opportunity for us to learn a bit about the entertainment or film financing value chain, and it won't surprise you all to learn that there are probably more opportunities beyond just funding the production of films. I sort of dimension it in two sort of aspects. There's the hard infrastructure and then the soft infrastructure. The conversation around community cinemas, that definitely speaks to hard infrastructure, because that's a distribution play. And yes, you know, we got numbers like, oh, if you want to open a cinema, it's $2 million and it's dollars, because you know you can't that equipment you can't get locally. When we made that first investment in 2017, back then I think dollar was around 440 or something like that. That was so 880 million naira to launch a new cinema in one of these malls. Today, what is $2 million? It's roughly like 3 billion or something like that. So again, we realize that community cinemas are the way to do it. We haven't seen an opportunity to invest in one, but we're looking. Also on the soft infrastructure side, at the MBO Film Financing Conference in April, I was struck, and you know, Jadi is here, and I had a conversation with her yesterday about how much all the filmmakers were complaining about the difficulty of post-production in Nigeria. You know, pre-production, principal photography, that's relatively straightforward to get done. They know how to do it. They've executed on it many, many times. But the capacity for post-production doesn't actually exist in large quantity here in Nigeria. Even when you find a guy like that you like to do your color mixing or your sound, more often than not, those guys have now jackpot and are now sending their bills in dollars or pounds for you to try and do. So we are very clear that we're looking out for the opportunities to fund capacity building, trainings. I'm aware that a lot of what we do in terms of post-production for the movies happens in South Africa. So it's now a question of us trying to seek out partnerships with those firms and encouraging capacity building in Nigeria. Anyway, I can talk about this one. Like I say, the film creative space demands its own day, and we're not here for that. So we're going to move quickly on. We have another two portfolio companies up to present. I'd like to start with Mr. Funshade Yemi of Utilita. Utilita is what is hopefully going to make sure that going forward you have 24-hour power and no need for inverters in your house. Funshade, please join us. Thank you.
Good morning, everyone. Thank you, Kole. Thank you very much, everyone, for having me here today. It's a pleasure to be here. My name is Funshaw Adeyemi. I'm the CEO at Utilita Energy. We're a midstream infrastructure development company, and our business is gas and power. I had a meeting in my office yesterday, and I was joking with someone. I think there was a power cut, and when they came back on, the building next to us installed, I'm sure you guys know, one of these alarms, and it went on for like forever, So the guy was like, that was really, really loud and long, I said, can you imagine if you're in Nigeria for the very first time, you probably think maybe the world is probably coming to an end or something, but you find that it's actually ingrained in us, so we see it as normal. When you think about it, it's actually like abnormal for you to just listen to these loud noises every day. But anyway, what we're trying to do is try and hopefully solve some of these issues and bottlenecks and problems. And like I said, we're an infrastructure development company. Business is gas and power, and as a result, we have certain partnerships across the value chain. Some of our partners from the equipment side, we have a strategic partnership with Mantrac, Schneider Electric, and Vatan Capital out of Turkey, where the suppliers cables, equipment, etc. As part of investment, we invested in Ikoyi IPP Limited, shareholders in Ikoyi. So we have a few subsidiaries within our business. One of them is Ikoyi IPP. We also have a business which is Ikoyi Utilities. At Ikoyi, it's a distribution infrastructure business. So let me talk about service offerings a little bit. Today, on the CNG side, we're working with Lafarge. Lafarge currently swapping over their diesel trucks to CNG trucks, and they started with about 1,000 trucks to date. So we're building their CNG compression plant in Calabar, where we're taking gas from a high-pressure gas pipeline and converting that to CNG for them to fill up their trucks. What that does is, from a sustainable point of view, reduction in carbon emissions from diesel to gas, which is obviously much better for them. In Ikoyi, we have a distribution network solution system where we buy power from Eco Disco today, and we sell to customers in Ikoyi. What that has done is we provide an uptime of about 90 to 95% uptime to our customers in Ikoyi today, which means they only have to switch on their generators for about 5% to 10% of the time. Also, in terms of independent power plants, as a business, we develop independent power plants and have these assets on our balance sheet where we raise capital all the time to build power plants for captive consumers, and also working with the discos to have embedded power solutions. Maybe to break down some of the issues that we have in the system. So the GenCos generate a lot of energy, hand it over to TCN, and then they hand it over to the discos. What we find is that across that value chain, there's a lot of losses because a lot of the equipment are really old and obsolete, and a lot of investment is required within that network. So what we're doing now is work with the discos whereby we can build power plants and embed it in their network. So if there's any grid collapse or anything, that power continues to remain in the system, and they're able to supply their high-use customers most of the time. So at least people can get access to energy whenever they require it. We're also now working with the REA, which is a Renewable Energy Agency, to reach areas where the disco don't cover. So we're doing isolated grids with the with the REA based on something called a PBG initiative, which is a performance-based grant in partnership with the World Bank. So we would have to perform, build these grids, distribute the power to the communities, engage them, sign agreements with them, and then connect them. So we get paid based on each connection that is done. So let's say there are 1,000 communities and we're paid, let's say, $500 per connection. We get paid $500,000 based on that transaction. So what we're doing is putting them in buckets, and so that we can roll out these investments. So talking about like Ikoyi, it's been operational. It's a 4 megawatt plant, which we did in partnership with the Ekiti State government. It also has a 10-kilometer underground distribution network. So as of today, Ekiti State government is off the grid. They are now on the network. And as a result, basically one of the things that gives us joy is not just about making money, it's also about impacting the community and the lives of the people. We had a discussion with the CMD, which is the teaching hospital in Ekiti, for example. And one of the feedback we had was they had donor agencies that had, how would I put it, that given them equipment, donated equipment over years, and this equipment hadn't worked for years, because obviously the quality of the power required for the equipment to work wasn't adequate coming from the disco. And from the network, these equipments are working and people are getting the adequate, they can use them, the diagnostic equipment, they can use them. So you can see the projects actually impacting lives. So that's some of the things that give us comfort. In my own team, also from a sustainable or from a business point of view, we're very focused on empowering our women. In our business today, 60% of our staff are ladies, engineers. They go to the field. We're very proud of that, and long may that continue. So we continue to give a platform for where women in our organization can thrive, women in engineering can thrive and grow as individuals, and we continue to support that. So next slide. So my team, myself, Chief Executive Officer, I've got Mr. Kunle Falola as my Chief Operating Officer, and Derek Shoneko as Head of Corporate Service. Nekan is Head of Projects and HSC, and Mr. Kundayo is Head of Business Development. So I also want to talk about where we are today, where we're going as a business, and what the future holds for us as a business. 2021 to 2023, we're incorporated. We have the Ikoyi Utilities project, which is a 5-megawatt underground network. One of the things that we found out was that at the substation, most of the time there's power available between 90 to 95% of the time. What we now realized was that between the substation and customers, a lot of the equipment there is derelict. So that's the last mile, as it were. So customers would then get maybe about 50 to 60% power requirement at that time. So what we decided to do was to build an underground network to connect customers. And then what we do is we buy power in bulk from the disco and then sell to customers, and then we recover our investment. Obviously, there's a margin that we make maintaining that network. And that's been really successful for us. We have quite a number of customers in Ikoyi today. Obviously, we manage all of that using very good technology. We also have very good smart meters, and we have partners in the metering space. And the feedback has been really, really good so far. So we're continuing to expand that network and extend it around the Ikoyi area and other areas. 2024, the Wheatbaker University IPP built a 4-megawatt plant there with an 8-kilometer distribution network. We also built a 26-kilometer 33 kV line because what we wanted to do was not just to provide power from a gas generation point of view. We also wanted a situation whereby we can support them with power from the disco and also support the community around the university as well. So that's operational today. And also the Lafarge CNG project. It's an EPC project where we're just building the asset for Lafarge, but we'll operate and maintain that asset as well moving forward. That includes the gas pipeline to bring the gas to the facility, and then we'll compress the gas, and then obviously the trucks can take the gas from that particular facility. And Dolgan, this is a project we're really excited about this year. It's a 60-megawatt independent power plant in Delta State. It's situated in Ughelli, Delta State. This supplies dedicated power to data centers and industrial growth areas. Currently, over time, I think the federal government went through a process of acquiring a lot of the flare gas in the country. So today, we're taking the flare gas from one of the flare sites in Ughelli. We're now treating that gas, and after treating the gas, we're going to put it through the pipeline and then use that to power these data centers that are going to be in Ughelli. We're having it at 2 sites. One is in Afiesere, the other one is in Eremu, and both these assets are going to be situated in these 2 areas. Site 1 would be about 16 megawatts offtake. Site 2 will be 26 megawatts offtake. The power purchase agreements have been executed, and we're right now in project development phase. We've concluded all the field development studies. The engineering phase is currently ongoing. Right now, we're also looking to raise capital. We're in the capital raising phase of that project. MBO Capital has supported us right across from beginning up till now, and it's been really exciting working with the team. They support us right across all our projects, and we've enjoyed that so much, and long may that continue. So I was talking about the Dorcan project. Right now, so that partnership is with Caterpillar. We're in discussions with Caterpillar at this stage. We're going to have about 30 units at the 2 sites, 2 megawatt engines each, and we're going to have about 60 megawatts in total. So, yes. Right, also with Kano Disco, we're going into a partnership with Kano Disco where we're going to be registering a special purpose vehicle as well with Kano. We believe that in one thing that we should, how would I put it, focus on best assets. In the north, what we find is there's a lot of radiation. So let's focus on pushing a lot of the renewable projects in the north. In the south, we have abundance of gas. Let us also focus on how we can monetize that gas. A lot of the gas there is flared. Why do we have to flare that gas and release all these carbon emissions into the atmosphere? We can also look at ways by which we can optimize these resources and use them. So in Kano, we now have an agreement with Kano to go into an SPV with Kano Disco, and what would happen is for us to develop solar farms in Kano. The first project we're looking at right now is an initial 2 megawatt project. So that project is going to be in Kira and Karfi in Kano State. It's going to be phases. The initial cost for phase 1, which is about 2 megawatts, is about $2.3 million we're looking at. And what's going to happen is this power is going to be embedded in the network. So it's going to be a total mix of energy within the network, and then they can pass on some of that cost saving to their customers. So we're looking to roll that out, hopefully this year, start that project hopefully this year. The Ughelli project, we're looking at Q1 next year for rollout. Right now, the engineering phase is almost complete. We've done soil tests, we've done all the necessary things. Right now, we're doing the EIA process, and we're working with the Delta State government to apply for the generation license. Yes, so thank you very much for your time, and thank you for having us. Thank you.
Hello. Thank you very much, Richard. You want to take your question also? Any questions for Richard at all? Any questions at all for Richard on?
I apologize. Most times I apologize for that. Any questions for me, please? Please. I'd like one, at least.
What's been the most interesting thing about working in the power space in Nigeria since the regulation?
Since the regulation, I think one of the most interesting things is that I think that maybe people don't hear enough of is energy theft. I find that people don't appreciate the level of theft that's in the industry. And I think that also one of the things that people struggle to understand is collections. A lot of people don't pay for energy. And I think more awareness needs to go into maybe the discourse probably needs to do more in terms of awareness. And I understand that people can think, okay, cost reflective tariffs are really high and all of that. Yes, but I think power management is also something that I think people need to know more about. Look, if you're not using it, just put it off, and I don't think there's enough of that. So what we're hoping for is more awareness and more, hopefully the regulators can help with that as well. One of the things that we also like so much, really a lot, that I think we've been clamoring for years, which is happening now, is the states taking control of regulation. I don't see how I would want to generate power in Delta State and I have to go all the way to Abuja to ask for license to generate in Delta State. So, but the states now have more power, and we're hoping that things get better, move quicker, for that to happen. So I'm appreciative of that.
Thank you very much. Any other questions from Richard, please? All right, thank you very much.
Thank you.
Thank you very much. Okay, so next up we have a representative of Metro Waves Project Arena. It's either Hamza, who I know has Hamza's gone for a contract signing, so instead we have Mr. Tomiwa Jafujo to tell us about Project Arena. Thank you very much, Ara. Over to you.
Okay. Good morning, everyone. Hello, Deborah. Yes, it's a pleasure to be here. Sorry, good afternoon, everyone. Okay, it's a pleasure to be here to speak about Metro Waves. Metro Waves Sports Infrastructure, their development company limited, that's the full name, is the development SPV for a project we call in-house Project X. It's essentially a 12,000 capacity arena located just beside the Palm Shopping Mall in Lekki. The land size, most people just drive past the express, but sorry, could you go back one slide? Most people drive past the express, but they can't see the site. It's essentially a 2.45 hectare site, just adjacent to the Palms. And if you go through the slides, I think you can see a model of what we've designed and what the arena would look like eventually. So it's a 12,000 capacity arena. Nothing like this exists in Nigeria. Nothing like this exists in West Africa. And yes, that's a model of what the arena would look like. Not the best of the images we have in-house, but we can always share things with you later so you see what it looks like. Next to the arena, in terms of competition size, would be, say, the Ikoyi Hotel Convention Center, which does about 6,000 capacity. In terms of configurations, the arena is able to do sporting events, music, concerts. We have about 67 VIP boxes. We also have smaller boxes and I'll say like club-style membership rooms where people can come in for an event. And the idea is to increase the dwell time at these events, where people come in for, say, a concert 2 hours before. There will be lots of food and beverage, other smaller acts and entertainments before the main event starts. And post-events, there's no rush for you to leave because there's still more food and entertainment in the spaces. In terms of our shareholders and our investors today, we have shareholders such as MBO Capital. We have the Nigerian Sovereign Investment Authority, which is the NSIA. That's our sovereign wealth fund. Very big institutional investor on our deck. And we have a company called Lagos Arena Holdings, which is essentially Oakview Group and Live Nation. For those who know entertainment, everybody knows Live Nation is one of the biggest promoters for music events, concerts all over the world. So it's a huge achievement for us to have Live Nation as one of our investors, and also a bigger achievement for us to have Oakview Group as well, who are one of the leading sports and entertainment developers across the world. Recently, they've completed and opened the Co-op Live Arena in Manchester, which hosts about 20,000 capacity as well. And most importantly, and our best of our investors, MBO Capital Management. Round of applause for MBO, please. Why I say MBO is one of the best investors we have is that it's more like a partnership. It's a hands-on, or let's say a hand-in-hand relationship where we work very closely with MBO, and over the years, it's almost as if I myself am a part of the MBO family over the years of working with them. We can please go to the next 2 slides. Okay. Yes, this is our CEO. Unfortunately, isn't here. He was here earlier, but he's gone off to conclude the signing of our contract with Elalan Construction Company Limited. So, by close of business, and hopefully in the next few days, we should have a contractor mobilizing on site. So if you see anything happening there in that corridor, that's us, and that's our project taking shape. And prior to that, we've concluded all sorts of pre-construction work, like development permits. Our designs are in place. Speaking of designs, when the project was conceptualized, we had a 9,000 to 10,000 capacity arena in mind. And from engaging with the likes of Oakview Group, Live Nation, the feedback was that 9,000 to 10,000 capacity was too small for the Nigerian market, and they encouraged us to go as high as 19,000 capacity. But obviously, being Nigerians and having some insights of the markets, we took the feedback and we pushed our existing designs as much as we could with world-renowned architects, Populous in the UK, who advised us, and were able to increase our capacity from the 9 to 10 to 12,000 capacity. So we have a 12,000 capacity arena being designed and built. In terms of piling, the piling and substructure works have been concluded, and the main work of foundation and steel erection and building the arena is starting in the next. Yeah, so it's a very, very interesting project, and it's an honor to work on this project, and I've been working on this project for the last, say, maybe two plus years. And once construction is completed, we can now be talking about giving Nigeria and West Africa a venue we deserve for things such as the Basketball Africa League, NBA Africa. The league started out playing all the games in Kigali, in Rwanda, Kigali. Today we have games in Morocco, we have games in Cairo, we have games in Senegal, Dakar today. And the feedback we constantly get is, when can we play a game in Nigeria? That Nigeria is where it's happening, Nigeria is where they want to be. Come December, we have all our big Afrobeats artists who, if you listen to some of their videos and some of their stories on Instagram, they keep complaining that there's no venue in Nigeria. So come 24 to 30 months from today, we will be proud to launch the X, it's codename X Arena, but we'll be proud to launch our arena to the public and begin to host our own homegrown talent and international talent in Nigeria. In terms of impact on the project, it's a very interesting project because when people think of sports and entertainment, you just look at it from the spectator's lens, but there's a lot that goes on in the background. There are caterers, there's security, there's people who commission and decommission a space. And in terms of job creation, by my estimate, I don't think we should have less than 5,000 jobs created by virtue of our venue being operational. In terms of music and athletics, once we have this venue, there's now a basis and a foundation for us to develop homegrown talents. Interesting that we have the guys from RSNL in this room. For most people who know me and know my career over the years, it's always been in retail, real estate, and I tell people that before the Palms was built, there was no formal retail. There was no going into supermarkets to buy things. We used to buy Coke from a Malam down the street. But with formal retail, there's been job creation, there's been skills transfer. When we used to build the malls back then, all the designs were done in South Africa. The M&E contractors were from Israel. everything came from outside. And today, you can have your homegrown brands grow and expand without any influence from abroad, which is essentially where we too are also trying to trailblaze, where in a few years' time, we'd be able to do smaller venues, we'd be able to do more venues across Nigeria, across Africa. And with the learnings from this project, we also will be able to do things as Nigerians without any recourse to foreign skill sets. Obviously, we boost tourism by having our venues. The hotels all around the arena would be indirect beneficiaries of our venue coming up. And we'd also be able to boost investor confidence in Nigeria, as more people would be visiting the country for sports games, be visiting for concerts and conventions, exhibitions. It's a very exciting project, and we're pleased to present this to you, and also to extend our gratitude to MBO Capital for their support over the years and their continued and expected support as we drive this project to conclusion. I'll pause now in case if there are any questions, any comments.
Hi, and good day, everyone. Thank you so much for your presentation so far. So in thinking of a venue, and it's something personally I have discussed with my friends, like what's the issue with venues we currently have in Nigeria when it comes to like maintenance and just the volume of people not being able to do like crowd control properly, like the volume of people coming in and out. So we are building a venue with more people. How are you thinking of security? How are you thinking of controlling the kind of people who come in, the amount of people who come in, and just ensuring that it's not an infrastructure that we see for a year or two and then it's just depreciating? Like it's something that people, that can meet the international standards that people would be expecting when they're coming in. Thank you.
Okay, it's good you asked the question. And in terms of our design and execution for the projects, we've actually taken a lot of investment, or rather made quite a bit of investment in technology, meaning that in terms of crowd control, we're looking at smarter ways to admit people into the building. If you go for concerts abroad these days, you're getting your ticket via a QR code, and you have multiple access points. So and we have, the way the venue is also designed, we have multiple entry points. So say if you were coming for a concert and you were assigned to enter at entrance 3, we have the technology in place in our current design for you to be admitted only through entrance 3. So that would help with crowd control. In terms of management of the building, we've identified an international venue manager today called Blue Rock Sports and Entertainment as well, who we've signed with, we've engaged with, and once this is completed and operational, Blue Rock would bring their expertise to manage this on behalf of Metro Waves and our shareholders.
All right, thank you very much. Oh, sorry, another question, please. The questions at the back. Okay.
All right. Thank you. So, looking at the project timeline, which is 2028, as stated. So if you look at Nigeria, typically we are moving into, so that means election is going to catch up with this project.
Mm-hmm.
Now, if we look at election and changes in government, then FX issues, procurement issues, do you have any worry with respect to timeline in terms of completion of the project?
In terms of our program to, I'll answer. In terms of our program to execute the projects, we've taken a very mitigationary stance on the contract. We have a fixed maximum target price contract in place. We've also advanced the contractor quite a significant advance. The way the building is designed, most of the components that are import dependent, we would have resolved by January, February next year. So things like the M&E, the technology, all of that would have already been imported, say by January, February, the steel frame of the building. So the last bit of it, which is essentially local, there's little to no price inflation expected. In terms of capitalization of the project, we are properly capitalized, and we've structured ourselves in such a manner where come 2026, June, July, we're not dealing with procurement issues anymore. We're just dealing with the actioning of the construction in itself. I hope that answers the question, sir. Okay.
Just an additional question, or comment with regard to the other lady. Parking space. What was the concern for projects like this? And also, I was wondering, power. You guys, because since the presentation with utility, are you guys thinking of collaborating?
By all means, sir. But in terms of parking space, to answer your question, part of our development permits was that we also have the rights to develop a multi-level car park on the land of the Palms Shopping Center. So that has been signed. It's a contractual agreement between us and the owners of the Palm Shopping Center to have a multi-level car parking structure there. So it was one of the CPs that Lagos gave us in order for us to get our planning permission. So that has been thought out, it's in place.
Any other questions, please? All right, so Jonathan, thank you very much. All right, I know we're going to keep things moving along. We have our next two presenters, Sourcing and Produce and FCSR Management. For those that were here earlier on, you would have seen the video talk a little bit about Sourcing and Produce. But now we have the MD of the business. Anyway, Larry has a very interesting background. I'll let him come and talk about his business in intimate detail. I sit on his board, so we're always very good friends now.
Good afternoon, everyone. It's a pleasure to be here. Sincerely, I've been looking forward to an event like this from MBO Capital because it allows me show my sincere appreciation. So I'll first talk about sourcing and produce. I'll go a bit about the presentation, but I'm not really a presentation guy. I speak from the heart. So the thing is, Sourcing and Produce is an agri export trading company. In simple terms, we connect smallholder farmers to global buyers of agri produce. Today, we are in 5 African countries, and we've done a lot. But when I think of MBO, when I thought about this event, 2 things came to my mind. The first one is divine helper. No, I'm serious. I'll tell you why. Wait, you guys clap too much. Clap too much. So, when I say divine helper, it was during COVID when I restarted the company. I've been in this business for quite a long time. It's been a lot of nightmares, up and downs. I learned it firsthand. I didn't work for any company. What MBO has done for me is to transition me from a street hustler to a visionary CEO. So, in COVID, how I got to know MBO was one of my mentors and my board chairman. I told him, he knows my story across the industry and my failures and struggle. So I was making small money and the FX was going up. So I went to meet him and I said, boss, I need 30 million naira to just transform this company, to show that this company can grow. So he said, I'll help you look for 30 million naira. And I think he spoke to a few people and MBO was part of them. And when he spoke to MBO, because of COVID, I remember speaking to Kule, we did not even see physically. We just went on the word of my mentor and Egbon, Mr. Folabi Eson. So, MBO agreed to give me 30 million. Mr. Folabi called me after because he was standing for me. He said, Larry, this is me God do or die. You cannot fail again. You cannot struggle. I hope all the lessons have been learned. Because if you fail, it is on me. I said, don't worry. That 30 million naira was borrowed to me for 3 months. It was quite expensive, understandably, because I was high risk. We paid it back. 30 million turned to 50 million. After 3 months, 50 million turned to 70 million. 70 million turned to 120 million. In that year, we ended up on a revenue exceeding 500 million naira. Today, MBO has given me, from that 30 million naira, over a space of 5 years, Currently, our loan portfolio with MBO starts at $1,250,000. So you can see the big transition in it. How many investors in this Nigerian setting? That was one of my struggles because I always got very high interest and no timeline to perform adequately. So thank you very much, MBO, sincerely. The second thing when I think of MBO is like Big Brother, they've allowed me put structure in place. As Kole said, it's on my board. It's allowed me do a lot of research and self-development on myself to put processes in place to run the company effectively. So today we are in Nigeria, Tanzania, Malawi, Zambia. We even, Liberia is there now, and USA, and we incorporated the office in Dubai. I'll tell you why some of these incorporations have to take place. So one, if you look at the agri-export space today in Africa, it is not, in the whole of Africa, because I've traveled Africa extensively, it is not controlled, respectfully, by Africans. There are people from China, India, Lebanese, and there's nothing wrong with that. But why are Africans not competing in this space? If you look at the biggest companies in the agri-export space today, we talk of Olam, we talk of Cargill, we talk of Bunge, we talk of ADM, you struggle to find one African company. And why is that the case? So Sourcing and Produce is trying to at least change that story. Our vision is building Africa's leading trading company. So we are doing audacious things. We went to Tanzania, we went to Malawi, we started exporting, we faced some struggles there. But I was so confident that we would succeed. You know why? Because the struggles I faced in Nigeria, I did not believe that if I was in Tanzania or somewhere, that it could be harder. I just don't believe. When my board chairman was telling me, Larry, I said, just if there was one successful exporter in Tanzania, I would be the second one. I'm sure about it. Because there was a time when MBO even invested. Let me tell you what used to happen at ports. You get to enter ports coming from Kano, to enter ports, you can take 1 week to enter ports back then in 2020. Then when you enter port again, for the shipping line to carry your container, I would say this, you have to call somebody in the shipping line and say, guy, I'll take care of you. Carry this container. It was everything. But thankfully now, the Lagos government looked into the ports and things are working more efficiently. So going to Tanzania, we knew we were going to succeed. Today, even Tanzania, for my projection, we call it South and East Africa operations, we will transcend Nigeria because they have so much more agriculture than we do in Africa. They don't have oil. So it's tourism and agri in most of those places. Today in Tanzania alone, I think last year we clocked about $1 million, and we work well with the farmers. Nigeria, 90% of farming takes place in northern Nigeria. Northern Nigeria is respectfully unsafe. There are places you go to. I remember one time we invested in farmers in Jigawa State, and we were having a board meeting. And the board was like, how much did you invest in this project? And I said, maybe 20 million naira. And they said, if they carry one of your staff on this project, how much will you pay? I was looking. I remember Kule introducing me to somebody in Rick's to have a discussion about it, And we had a discussion, and I thought to myself, to invest 20 million naira, and when they carry 1 or 2 people, you pay 40 million naira to visit them. Does it make sense? So we stopped that project entirely. But what we've done is to now do that in Tanzania and even Burundi. And it's so easier. We work with the local government there. Let me not take too much time. We have customers in 55 countries. Of our customers today, about more than 10 of them are multinational companies. These companies use our products for pharmaceutical, tea, spice industry. God had mercy on Africa. I'm not lying to you. If Africa did not have agriculture, all of you here, maybe with successfully and Mr. Ogudari, you'll be jumping like monkeys, because we don't have anything. Like, really, maybe we don't utilize it fully. But the international world is still dependent on this agriculture. Today in Africa, we are in Nigeria. Our company, because MBO sits on our board and they are equity holders, we are one of the biggest hibiscus exporters. Hibiscus flower is Sobo leaves. If you drank Sobo before, these things, you guys will take it for granted. We sell millions of dollars of that thing. There are places in the world, places like Mexico, the Hispanic community, they value it so much. You know the way we value gari, rice? That's the way they value those things. So we are able to sell it on a consistent basis to them. Things like orange peels. I'm just giving, although the market is not as big as because you take your orange peels, you throw it away. These people are looking for orange peels. I know, I think I've said this thing to Kule before. I say after the white man, after God, with all due respect, it's the white man. Because they marvel what they've been able to do. At times you eat a biscuit, you smell something, oh, this thing is orange flavor. That thing did not see one orange. He just took the peel, extracted the oils from it, and transcended it to something bigger than that. So these are a few of our products, dry ginger. During COVID, people were just buying anti-detoxants or whatever. They were just buying. I was the only sales guy in my company. We were 8 employees, but the others were just coming to me. Pepper, turmeric, ginger, and we're able to sell them. So let me share this again. So now MBO, over the last 5 years, they borrowed us the equivalent of $4.6 million. We have 75% customer retention. Please, next slide. I'll talk more about. There's no way I can say my story without the impact of MBO in it, So this is my Egbon that stood for me for that loan, He knows I'm here today. I told him, this is Charles, my long-term friend. He knows some of my stories, like some of my frustrations. So let me tell you what I did. So it's difficult to sell as a Nigerian internationally. The moment you start talking to a customer like this and you say you're Nigerian, you can feel in their face that this is Irish. So I started looking for ways to. So I had to really become friends with this guy at one time in America. And this guy, see, I know others don't trust me, but I've never run away with your own money. Help me talk to some of these customers. So when we are talking, I say, there's Charles, he's an associate professor at Harvard, there's Charles there. And this guy, he's also a divine helper. They will go to that customer's office on my behalf, at his own expense, to just say, hey, I know Larry is my guy, he's Nigerian, he can do these things. And deals will come in because of his association. Although now it's much more busy and we have even a more robust team. So Madeline just joined us, I think, late last year. She used to be the MD of Startup Chandler in Kenya. She has a big passion for agriculture. She's a big impact. She's the first woman on our board. Please, next slide. So I've spoken about some of these, incorporated, SAP Malawi, So when MBO took the risk, and it was sweet, it was getting sweet. About the second year, they had equity. Next thing, I just saw that people were taking attention. Every time bankers come into my office, people come. So there's this company I've spoken to before, MBO Capital. MBO Capital just came, looked at the numbers and said, Larry, if you see money, I think then MBO was giving us about maybe $400,000. That's how Sahel gave us $1 million. I almost fell for my chair the next other one. I could not believe it. After 3 years of struggle, I almost died building this company. No, I'm not lying to you. See, you should not be an entrepreneur in Africa. Wait, if God did not send you, if you do it by vibes, I want to be an entrepreneur. And you are collecting people's money. Your marriage will break up. You'll be telling people, they cost me. You'll be running from MFF to Africa. Africa is tough. Me, I believe I've been assigned. That's why MBO joined me. But it took a while to see this growth. I will share more on this later because I wrote some of these things down. Please, let's proceed. So what we do, global market access to farmers. Today we work with more than 3,000 farmers. Even there are countries that we are not incorporated that we work in. I have a very great team. They enter as much as Burundi, we enter Kenya, all those places, and we actually get goods out, to export. Now we know how to export from Tanzania. A lot of countries in South and East Africa are landlocked. So they work together more than our side in Africa. So, like for instance, transportation between Burundi, South Africa, Burundi, Tanzania, Malawi, Tanzania, is almost seamless. The roads are not as big, but they are better. Although they have their own challenges too. We reduce food waste because we are guaranteed off-takers for these buyers. Our trading creates significant employment. About 80 to 85% of our cost of sales is spent in African farming communities. Financing, we are able to finance farmers also. Like I said earlier, the local government, they get the names of the farmers for us. We have town hall meetings with them. Although language is often a barrier, they speak Swahili. So while they are speaking, we are translating. And like every farmer, we don't give them direct money. We buy the seeds, we buy the watering hose, the whatever, to help them farm. And they sign that they will give us X amounts because of what we have given them. So at the end of the harvest, we don't do So let me let you on a secret in farming, although it's not, there are things that are different with it. So we don't do long-term farming. We do products at 3 months, 6 months. You know, the moment you are doing it long-term, you leave room for a lot of, do you get games? So you do it, you monitor it, and you get your output out. It's been significantly successful for us. Business side. So supply with contract. Now we're in a place where we even have a reputation. There's hardly, we've traded to 55 countries. There's hardly any country or neighboring country that we approach a customer that we are not able to give you a referral. You know, because over time we built it. I've been in the industry now 15 years, sourcing and produce is 5 years old. So like if I tell you countries we export to, Kazakhstan, Finland, Guatemala, Peru, and there are also other bigger countries, so like the Americas and the rest, you know, in it. But with tenacity, we've been able to create this. Payments from customers. We receive 99% of our payments in dollars. We have been profitable on year except 2022 when Russia Ukraine war. Let me just talk a bit about this. So in 2022, we made our first loss, and that loss, I'm telling you, is one of the biggest blessings that happened to me. Although it wasn't, it didn't feel like that at that time. I was going to board meeting like this. How do I tell people that I've lost about 200 million? But I remember even saying, it's something we can get out of. I was like, hey, get out. There's this big book called The Power of Positive Thinking. Norman Vincent. I swear, I read that book 3 times. I finished the book, I read it again, because I was like, these are village people. They want to really get me. And what happened? We were shipping to Russia and Ukraine. 10 containers to Ukraine, 5 containers to Russia. Before the war started, we assigned the contract. These are customers that year after year we've been dealing with for a while. So the shipment was going. I heard about tensions in the region. I called the Ukraine customer. Russia is threatening you. What's going on? Larry, don't worry. Russia has been threatening us since 1997. You don't have a problem. They are just threatening. Russia customer said, don't worry, just ship the 5 containers. The day that war broke. Hey. I remember where I was, everything. I called the Ukraine customer. What are we going to do now? Because the containers were going to arrive just a week, like a few days. I said, Larry, I'm on this for my family. And then he abandoned my old ship. He was supposed to pay. He abandoned the old shipment. The 10 containers. The Russia too. Russia should not have any problem. All of a sudden, the shipping line started saying they have the embargo. That they are not going to Russia again. What is wrong with you people? The money to reroute those shipments. The money. So, you know, we are now in the information world. So people know. So they know that there are certain cargoes that was going to Russia, you can check, and somebody is desperate to sell. So instead of the agreed normal market price, they were just dropping price on me. Eventually, I sold that containers to Russia, to China. But the cost of, that was what cost my major loss. But it made me better. Now, international news, CNN. If I hear, my people know, if I hear threats, 2 countries are threatening each other, threats. You can't bring it to me and you fly. Did you hear that? They are threatening each other. Are you okay? Because when it happens, you are the biggest law. And I remember my chairman saying, who could have imagined that a company like the size of sourcing and produce could be impacted on such a global scale, you know? So even it made me take myself more seriously on this international trade. Go back to the next slide. There's something I wanted to say. So one of the things, you can move ahead. So one of the things also is that on average, a customer spends about roughly $70,000 to $75,000 when they trade with us. So I have a few things here why you should partner with Sourcing and Produce and MBO Capital, because we are one. You know, on my board, although me and Kule at times he does big economy, he will bring his arguments, blah blah blah. But if I'm really determined about something, I know how to win. It is spiritual matter. When I pray, I mention his name like this. And MBO Capital, everything. You know, it's not by power or it's not by force. I've learned my lesson. So some of the achievements that we've achieved over this period. So in terms of numbers, over the last 5 years since MBO has joined us, we've generated more than $10 million in revenue. Our gross profit is between 19 to 22% on a yearly basis. Our net profit is between 4 to 13%. We've grown employees from 8 to close to 70 from 4 different countries. We hired our first expatriates this year for sales. That's a big achievement. You can clap now. Because we're paying Oyibo's money. It's not easy. 70% of our workforce is women. Like I said, we are one of the biggest traders of hibiscus flower in Nigeria. We are the biggest trader of red-eye chili pepper. It's a kind of pepper in Tanzania. They don't eat pepper in those places, but we go there, you are not eating pepper, don't worry. We know where to carry it to. So they just wonder, why is these people carrying pepper to? Don't worry, just watch. You know, when we finish, you start eating pepper. We are able to take dollar loans also. I think this changed our life. And I thank God, because if we are not taking dollar loans, how would I pay back 35%? You know, but because of dollar loans, we are able to, because we generate dollars. You know, and the moment your customers trust you, because they have more money than you, it's life changing. The moment they trust you like this, I had a customer give me $1 million. Customer for his goods, he was desperate. He just said, Larry, you must guarantee supply. I said, don't worry, you must guarantee supply. And he transferred $1 million to us. And we're able to use it. You know, when the customer transfers money in advance, it's like, you just make sure you deliver. The process is starting, you know, so that has helped us to. We are consistently increasing our product list. As I speak to you now, we are exporting coffee. We are exporting coffee from Tanzania. We are exporting pigeon peas. This coffee is not really popular in Nigeria. We've also been able, through the help of MBO and MCM Capital, to grow our balance sheet to about 4.5 billion at the moment. So the story has been very romantic, very challenging, but also I'm grateful to God, you know. At times when I am on my own, I don't say, what if I cheat myself? You know, because there was a time I was contemplating it. Nothing, I would have, what even caused this depression that time? It's 150 million, 150 million naira. But I didn't have the capacity to handle it. You know, when you were an entrepreneur, you are building a business, you have to build capacity. I was the bookkeeper, I was the customer service, I was everything. So there's no way you would not drop the ball. So what I did differently, when I started now, I went to research, well, I formed a team. I have a CFO. If he says, Mr. Larry, we can't spend this money, I say, okay, don't worry, we can't spend it. You know, did that guidance. Today now, I think over the last 2 years, we've had loans of 3 to 5 billion. I'm telling you, I keep. We do not miss any loan because there's proper cash flow planning. There's proper operations people, but not one person can create significant wealth alone. You always need people. And one of your jobs as a CEO, as a leader, is to identify talented people who suit this vision, and you do them well also. So finally, let me leave on this note, 2 notes. So we are looking to expand our trading. We want to become like the Olam or Cargill in this space. It's not overnight thing, it's more work. But I know that with the help of MBO on my board and all the supports I have, we are able to do it. You know, we are looking for about $3.1 million. Today, 85% of our trading is in Nigeria, 15% is in C and South Africa. And I expect C and South Africa to go higher because they have even a lot more than we do. The other thing I would say with MBO is that when I work with an organization, I observe their staffs. Their staffs tell you a lot about the company. At MBO, I'm quite familiar with the people, even aside from Kule that is on the board. Like Kenya is my very good friend. We even have mutual friends. Falaji Mitu is a friend. I see that they're happy. You know, when they engage you, there's a kind of happiness. And that thing is key because the leaders cannot do it alone. And it also shows me that when I'm dealing with this company, if the people are happy, if there are people, they feel good about the company, it transcends to how they work and how they engage others. If a company treats its people bad, eventually there's no way they won't treat outsiders bad. So I'm sure that MBO can tell you for certain that they treat their people well. And that's why they've been tapping all along. So thank you very much for this opportunity. God bless MBO. God bless Austin and Produce. God bless Africa. Thank you.
Thank you very much for that, Larry. How do you follow and act like that? I don't know, actually. He has more experience doing these things than I do. Sourcing and Produce is one of those companies that, again, I'm very proud of. And in fact, there's a funny story that relates to how we work with investors because, originally the funding model for MBO is, we talk to investors like yourselves, and we ask, give us some of your spare naira, let us invest on your behalf. And then we encountered a problem at a time when, obviously, because of all the devaluation going on, we would go to our investors, and everybody was like, I don't have naira to give you. I don't save in naira anymore. All my money is in dollars. But if you take my dollars, I trust you guys. You can have my dollars, and we can come to an agreement. So Jide and I had to now meet and figure out, okay, finance 101. If you're taking dollars on your balance sheet, you have to find businesses that will give you dollars back. And that was really why we got involved in Sourcing and Produce. And actually at the time, and yes, I remember because I was 2020, everybody was battling COVID. I was isolating. I got to meet Larry, and he's right. We did the first deal without actually having met because everybody was isolating. We couldn't meet, and it was a naira transaction, but all Larry's revenues, smaller as they were that time, were in dollars. So we were on the right side of the hedge, right? So it was one of those businesses where we found an outlet for the dollars that investors were giving us, and it actually led us to also doing a lot of the stuff that we're doing in the creative space. Johnny is left now, but Johnny produced 2 movies, Gangs of Lagos and Brotherhood. Most of our funding requirements were in naira. All our returns, because those movies ended up on Amazon Prime, were in dollars. So it's one of those things that has led to the natural evolution of our business. Just looking at the opportunities rather than challenges, as our keynote speaker mentioned earlier. Our next speaker, who has a lot to follow on based on what has just gone past, so I'm going to address her properly. Her name is Dr. She's MBO Capital. Thank you.
Okay, good afternoon, everyone. I was telling my colleagues at the back, I said, after that last presentation, I don't know how I'm going to create the tempo and keep the tempo going. But I am very excited to be here. I am Dr. Topo Mojoko. I humbly so. I started as just a Mrs., but then you are adding a doctor to my name. Anyway, that tells you that, you are in an organization that allows you thrive, get better at what you do, improve in yourself and what have you. So, FCSL in a nutshell. Well, FCSL is the financial services subsidiary of MBO, and we're very proud of that. We basically are licensed by the SEC and the NGX as broker dealers and investment banking activities, also fund managers, and that's we recently just obtained approval from the SEC. So the approval process started, if you look at the timeline, when MBO acquired majority stake in the then F&C Securities Limited. We then morphed in next slide please. We then morphed in, I think about 2011 to what we call FCSL Asset Management. And then in 2017, there was the acquisition of the issuing house license, or the approval was obtained from the SEC. So we then became an issuing house. So at the point of the then acquisition by MBO in 2020, there were already 2 licenses in place. So the broker dealer and issuing house license. And then when MBO came on board, I felt, look, we can't just live by, I won't say bread alone, but that was like bread alone, which is just stockbroking and issuing house. We had to do more. And in doing that, the mandate was given that we should then chase the fund management, so portfolio management license. And that we started fresh. So we weren't out, I joined in 2022, but when I joined, that process had started. And weren't out to, as a firm, acquire an existing license. The mandate was to get a new one, so that took us quite a while. And we are pleased to inform that with the support of MBO and various stakeholders, we now have that license. So that license was acquired 2024. July was when we got the approval, and then you typically will go through the motion of having your products approved by the SEC, get no objection, and we were able to get 6 products approved at a go by the SEC. and that we started to run with under the name of FCSL Phoenix Funds. I think currently, as we speak, as of 30th of September, transactions in excess of about 15 billion have gone through that business since January that we effectively started. We also sort of pushing on our investment banking business. We have a great team. That was the slide before now. Myself, Omoife is here, my colleague who heads the asset management business, and also Andrew, who heads the corporate finance business, so majorly the investment banking side of our business. So we've been on transactions, I would say in excess of about 900 odd billion, but either as maybe issuing house, joint lead, or in some cases broker, where it has to do with an equity raise. So for us as a business, I think a lot has been said around impact. And you will find out that with MBO, the key thing that resonates, a key phrase is, oh, we have this number of female in our workforce, we have that number of female. And I recall that at one of our strategy sessions, the ones for 2024, I think we coined it to say that MBO Group is a he for she firm. And so for us at FCSL, my chairperson is Dr. Musumola Bello Lushoga, the former chairperson of Access Bank. I am MD CEO, and the plan is actually to extend that further to have more female inclusion in that board. But currently, as a business, the workforce, we have in excess of 50% of our staff as female, and we always ensure that even in our recruitment process, we take note to ensure we balance it out. So there are sometimes we are 47, we are 45. So please forgive us if this is a bias, but we're really promoting that as part of our whole way of making that impact within our space. So for us, we had a session last year, and it was basically looking at the marriage between investments and technology. So we called it an Investor Tech Conference. Part of the key take home for us was the need to improve on financial literacy. So part of the number of speakers that came from the SEC and a few of those within the tech ecosystem. And then we even had students from Unilag come and speak in the investment club in Unilag. And we want to really know, why are you not coming to the equities market? Why is it just the moms and the pops, right? Why is it just the older people? Why do we still have less than 1 or 2 million CSCS of active accounts? Why can't you come on board? And a lot of things were thrown at us. Technology being an enabler, because they will invest with piggy vests and the rest. So, so lack of knowledge as well. We don't know what this thing is all about. We just know people putting money and they tell us the money is down, and our parents just keep complaining. And so part of what we said was, whatever we will do in that space to ensure that we project what investment is about within that space, we will start across the spectrum, whether it be lower school, mid-school, and also in the university. So you will find from the pictures part of the impact. So we have financial literacy, where our office is in Ikoyi, so we started with Falamo High School. And just getting to talk to the kids and getting them more aware and giving support to the school when possible. Likewise, Pan African University, and also even a few other schools, even our covenant as well. So for us, it's more than just driving the numbers, but also ensuring that we push and drive investment education. Currently, we're building our mobile app, and we're almost done with that. We're probably at the final phase. So we're doing all this agile testing back and forth. But one thing I want to drive at with that is that you will find that it's got a two-prong, it's got a marriage. The marriage is between investment and education. And when Dr. Was speaking at his submission, he said, MBO, one of the things that he observed from his conversations is that we take feedback very seriously. And we took that feedback from the engagement at the Investor Tech Forum, and we felt, you know what, we're not just going to build an app because we just want to build it, but we're also going to marry education, investment education. And I think part of what we've positioned it to do is to educate, and after you're educated, there is a virtual environment where you go and test it out. So if you burn your hands with virtual money, it's cool. but you can still circle out. You've learned what you need to learn, and you go into the real world. So it's having that feel of virtual reality, and then you then go on into the real thing, and not just that, also giving them all the tidbits that they need. And I think in future, not to just stand be embracing AI. So I think that's it from FCSL in a nutshell. I look forward to other engagement. Thank you very much.
Thank you very much, Dr. So excuse me, I got distracted. Apologies. Thank you very much, Dr. Okay, sorry, we did start a bit late and we're running a bit late. It's now 1:30, but we've come to the final presentation for the day. And it's the final presentation for the day for a reason, because for any of you that are familiar with this axis, there's a lot going on in terms of Lagos infrastructure. And this presentation is going to speak to both on infrastructure and the real estate play. And it's a company that we have been involved with for a few months now. It's run by the other JO who I'm going to introduce now, Jumoke Windari. Please give her a round of applause.
Good afternoon, everybody, and it's a pleasure to be here. I thank MBO for inviting us. I'm here with two of my colleagues, and actually, this is the size of the company. It's still a very young budding company. I'm here with Kunle, who is our project manager, and also with Deborah Omera, the managing director of our real estate business. During this presentation, Deborah is going to come up and talk about the real estate arm of the business. So what is Lagos Lagoon Highway Limited? I think the best way to start this is to tell you a short story, a very short story. In 2002, Lagos State Governor was trying to solve a problem. He probably started thinking about this problem well before 2022. But we first had that interaction with him in 2022. The problem he had at the time was that as far back as 2008, Lagos State had a strategic transportation master plan. And in the plan, it had envisaged that at this time, population would have grown and they needed to increase their road network. And on the Lekki axis, east of Lagos, there meant to be three major roads. The coastal road, which is being developed now, the Lekki Expressway, which they had started working on, and then the Lagoon Highway. At the time, the Lagos the Lekki Expressway was built, the population on that axis was about 600,000. So today, that population is well over 1 million, but the road has still, the expansion that they had planned, which is the Lagoon Highway and the Coastal Road, has not been built. So you would imagine that when Lekki Express Road was built, economic activity increased, population increased. What you would expect, when you have infrastructure. But the required infrastructure that Lagos State had put in their 2008 master plan, they weren't able to execute because of funding. And, he would get calls from people about the nightmares on the Lekki Expressway. It's meant to be an expressway, but sometimes you can be on the road for 4 or 5 hours. I personally have been on that road for 6 hours, and I did not get to my destination. I had to turn back. So it can be pretty horrendous. And so it was a headache for Lagos State, and they were looking for a solution. Lagos State did not have the funding. So the solution was a public-private partnership. Now, my first meeting with Lagos State was, the first thing the governor said was, we don't have money. So if you're going to do this, you have to fund it all on your own. So but we then reached an agreement. We knew it was going to be a PPP. But we reached an agreement that if you're not funding, you have to give us something to make it attractive for investors to come in. Because as a public-private partnership, investors will need to get their money out. And the road, we agreed, would be tolled. But in tolling the road, we also had to make it affordable to all income classes, which means that it would be very difficult for investors to get their money out from tolling. And it's not peculiar to Nigeria. In other parts of the world, what you find is that when you have PPP toll roads, it's usually compensated with something else. So in our case, Lagos State agreed that we would be given permission to reclaim land on the water, on the lagoon. We'll also be given land in an emerging area in Lagos. It's called Itomo. In Itomo, we have about 20,000 hectares of land that has not been developed. And so Lagos State agreed that they will give us some of that land, which we can then sell to deliver return to our clients, to our investors. So we started, Lagos State had a problem. The problem was traffic congestion. But by the time we put the structure together, it ended up being solving two problems for Lagos State. The first was traffic. The second was, the gap in housing. As you know, in Nigeria, there's a huge gap between demand and supply. So we were creating solutions using one product, which is the Lagos Lagoon Highway Limited. So if you go to the next slide, so as I said, it's a PPP. With what we're doing, we're solving a solution for Lagos. We're increasing economic activity in Lagos as a result of this road. We're creating housing for middle, low, and high income families. We're also creating an opportunity to have a better lifestyle because, I don't live on that axis. I visited the axis, and I know that sometimes, that's what my experience is what some people go through every day. I even know some families who have houses on the corridor, but, during the week, they're in Ikoyi or Victoria Island, and then they go home at weekends. It's that bad. And I'm sure that you also can relate to what I'm saying. So this is what the project is about. It's a 71-kilometer road. We're connecting the Third Mainland Bridge. We're connected to the Third Mainland Bridge, and we're building on the lagoon, and it's going to terminate at the international airport that is meant to be built on that axis. So to get your bearings, this airport is going to be opposite Alaro City, if you're familiar with Alaro City, which is in Ikoyi. So it's 71 kilometers. We have, because of the size of this project, we're phasing it. The first phase is 30 kilometers, and that phase is even further broken down into two phases. So the very first phase is to build 17 kilometers. 9 kilometers to Freedom Way, and then 8 kilometers to Gracefield. And then we built 12.896 kilometers that takes us to Itomo, where expectedly this infrastructure will open up that neighborhood. And then the 41 kilometers, which will be built on land, will take us to the future international airport. I should also say that in developing this, because Lagos State is giving us land, we would also be reclaiming land as we're building, the road. So the first phase of this project is the first 9 kilometers, and then reclamation of land on the lagoon. We're currently, Lagos State has given us permission to reclaim 500 hectares on the lagoon, and then we have 500 hectares of land in Itomo. Now, as you're aware, I'm sure some of you might be thinking, can you do anything on the lagoon without the federal government? The answer is no, you cannot. When we started the discussion with Lagos State in 2022, the idea was that we would go to federal at some point and get their permission to do what we want to do, through the concession agreement with Lagos State. However, very early this year, we felt that a better strategy was to involve the federal, even at this point, before we signed the concession agreement with Lagos State. So we have been in talks with federal government, and it's going to be very difficult for any government, any responsible government, not to see the advantage of what we're trying to do. So federal has been very supportive of this project from the presidency down, and they see the need for this project because of all the developments, and they think that it will also change the balance of population. The east side of Lagos has the largest land mass, but it also has the lowest population if you look at central Lagos or west compared to east, and that's because there's not enough infrastructure. But with everything that's happening along that corridor now, and with this road, we'll then see a movement from central, which is fairly congested, and the west more to the east. So this is going to solve that problem, and we're now working with the state and the federal government to develop this project. We've carried out studies for the project for the first phase. Because we're building on water, we're working with very consultants with very good experience, not only locally, but also internationally, to make sure that we come up with a project that ticks all the boxes in terms of environmental impact that this would have, given that we're building on the lagoon. This project is going to take, can you go back, please? Can you go back? Okay, so it's going to take us, go to the next slide. It's going to take us 6 years to build the first 17 kilometers. And also to reclaim 500 hectares. We only need to reclaim 500 hectares. The other 500 hectares is on farmland, so we don't need to do anything to that. What we're doing as a company is, with the real estate portion, we're not building, we're just providing first-class infrastructure. And I'm going to let Deborah speak to that. So it's going to take us 6 years to develop this project, the first phase of the project. 17 kilometers will take us until 2030, and the remaining 12.896 we'll do in 2 years. And by 2032, we should have completed 29.896 kilometers of road and reclaimed 500 hectares of land. As I said, we've carried out all the studies. Can you move to the next slide? There is a video I would like us to, is that at the end? That video is at the end? Okay, you can play. Okay, because I think that it's good for you to, I've talked about it, but it's good to visualize it. So we have a short video that we'll play now, and then I will carry on. Go back to just the last shot of that video. So this, what we're doing is connecting neighborhoods. So it's not just a highway that starts from the Third Mainland Bridge and just takes you to, it's a straight line to the airport. So we are connecting, the first connection, you may not see it, when we made this video, it was about 18 months ago. So you will not see the link. We've since improved on this. But there is going to be a connection, if you can see, just somewhere here, that takes you to Marina. So there is, when you are at Ilubiri, you can either go straight to Marina, or you take the bridge to that takes you to Apapa, Surulere. So we're going to open that up, so that when you're coming from the mainland and you don't want to go into Adiniji and all the way down, you can come onto this bridge and take that exit to Marina. We're also then going to create a link bridge between that takes you from our highway to Ikoyi via the Secretariat. So you know that there's the Dolphin side of the Secretariat, and then the other side there's Niwa, there's I think Niwa Jetty or something on the other side of where you have the Dolphin Estate. So on that other side, we're going to be connecting, building a bridge from the Lagoon Highway that takes you into Ikoyi, so that when you're coming from the mainland, you don't have to go through Osborne to get into Ikoyi. You can just come onto the bridge and take the link bridge, and you're in Ikoyi. Then the third connection is Freedom Way. So today, as we know, all the islands in that area everybody, you either converge on directly onto Lekki Ikoyi Expressway, or you come onto Freedom Way, and then you then find your way to Lekki Ikoyi Expressway. And sometimes even if you're further down, you then look at the Chevron Drive, and then you take the Chevron Drive, and then you're out onto the Lekki Ikoyi Expressway. So everybody's converging, those two roads, Freedom Way and then Chevron Drive. So basically what we're doing is connecting, we'll be connecting the highway to Freedom Way, so that if you're living in that area, you don't have to go onto Lekki Ikoyi Expressway. You can just take the highway, come onto Freedom Way, take the highway, and then you're in the mainland. We're also going to be connecting to Fourth Mainland Bridge. Fourth Mainland Bridge takes you to Ikorodu, but it also takes you to Wheatbaker, where you land if you're going into Ikeja or Wheatbaker, and then you can then get onto the Lagos-Ibadan Expressway. So by connecting to the Fourth Mainland Bridge, actually we then create a ring road around the lagoon. So imagine that Fourth Mainland Bridge has been built, and you're on the Lagoon Highway. You can take the Lagoon Highway, you cross over from the Fourth Mainland Bridge, you can get to the mainland, and when you're coming back, you can take the Third Mainland Bridge and then get onto Lagoon Highway. So we've actually created, Lagos State would have created a ring road around the lagoon. And by doing that, you ease traffic. You also help with all the industries coming up around that area. It's easy for them to move their goods from Ikoyi and the neighborhood onto get onto Lagoon Highway and then to the Fourth Mainland Bridge, and then you're in Ikorodu or you're on the Lagos-Ibadan Expressway and out. So this is meant to create all of those opportunities, access, exits, and entries into the eastern part of Lagos, which is, people say that eastern part is the new Lagos. The fourth connection is the termination at the Chevron Drive. So I mentioned that similar to Freedom Way, that you have Chevron Drive, where quite a number of islands also there, developments there, and everybody take the Chevron Drive today and get onto the Lekki Ikoyi Expressway. So we're also going to be connecting to Gracefield, which is the island by Chevron Drive. So the likes of Gracefield would then have access. Instead of all of them going through Chevron Drive, they can then get onto the Lagoon Highway and onto either Ikoyi or VI or wherever they want to go, taking that route. And then the next 12.896 kilometers takes you to Itomo, which is relatively undeveloped today. And today, if you're familiar with that access, Lagos State is building or has built a link bridge. And so our bridge, the highway is going to touch that link bridge and ultimately opening up the Itomo area. And by doing that, today Itomo is relatively unhyped, there's really no activity there. So by doing this, you open up that access. And then this takes you to the international, the last phase takes us to the international airport. Now, this is a huge project. And by all standards. And so there, we've considered several things that could go wrong. We have a risk management framework from construction to market risk to execution risk, finance. There's so many risks. We have a table that, and we've looked at different mitigants to ensure that we execute this transaction seamlessly, and we're able to deliver returns to the client, to our investors, at the right time. But more importantly, also to make this a pleasurable experience for Lagosians and ultimately Nigerians that go on the road. I won't touch on this, but I think it's important to say that, in developing this risk management framework, we worked with local as well as our international, consultants in putting together the different things that could go wrong. People who have done this in different parts of the world, and the mitigants that we need to have in place to ensure that we do this properly. The real estate bit is an important piece for us, because it's the toll, yes, will service our interest for the debt, but real estate is important in the sense that it's we're creating new cities, new neighborhoods. So we're very mindful of that. It's also a source of return for our investors. So if you please bear with me, I would like Deborah to take this slide and talk about what we're doing with the real estate part of the business.
Thank you, Jo. Our Jo. So I'm Deborah Meriwa. I'm the MD of the LLHL Real Estate. I think Jo has already spoken quite a bit about what we're trying to do with the real estate. One of the great things about this project is that it's sort of a dual infrastructure project. So Jo's talked about the transport infrastructure, but then there's also the real estate infrastructure. We all know that there's this 17 million housing deficit that's been going around. I've been in Nigeria now for about 15, 16 years, and it was 17 million then, and it's still 17 million today. And so one of the things that Lagos State is really keen on doing is putting together infrastructure that can help support the housing deficits. And one of the great things about this project is that it does that. Jo mentioned that the government have made it clear that this has to be a privately sponsored project, but they also understand that with tolling, the revenues, I think the revenue split is about 90% for the real estate and then 10% for the tolling. And what they've done is to ensure that the viability of the project is to actually contribute the land to the project. So there's the 500 hectares of firm land in the Ituomu area, and they're giving us permission to reclaim another 500 hectares of land on the Lagos Lagoon, which is in the Ikoyi area. I'm going to try and see if I can give you an idea of where we call it the wetland, so the area that's going to be reclaimed in Ikoyi. So here is Banana Island. This is Parkview Estate, and then you have Ikoyi Crescent and Osborne Estate. So it's right behind these estates on the island, and Third Mainland Bridge is on this side. This smaller island here is Diamond Island. So if anyone's familiar with Diamond Island, it really just gives you an indication of just the scale of the real estate that we're building or developing on the island. One of the other great things that this project does is it really does address the housing needs for a wide range of Lagosians. So as you can imagine, we're reclaiming land on the lagoon and it's in Ikoyi. So this is actually the more expensive part of the real estate play. And so this island, we call it Ikoyi Lagoons, will be for more of the middle to high income earners in Lagos. However, the other 500 hectares in the Ituomu area really does address the needs of the middle to lower income homeowners or residents in Lagos State. We've worked very closely with an international firm called DAR for the master planning of this. One of the things we're looking to achieve is to ensure that we're building the right kind of infrastructure. I tell people all the time, this is sort of, I think the location of the Ikoyi Lagoons is Ikoyi North. But what we're trying to do, and it's sort of like a new Ikoyi, but it's bringing back the essence of the old Ikoyi, where you have land, you have green areas, you have waterways, you have I think Lagos seems to be going up, Ikoyi especially is going up, because there really isn't much land available anymore. And so this is really bringing another 1,000 hectares of land to this part of the region. And I think that is as much as I'd say. I think the islands are mixed-use islands. About 75% of the islands will be for residential use, but another 25% will be available for commercial, hospitality, retail, and our focus as the land developers, we're not necessarily building, but we're building the land and the infrastructure, and then welcoming developers to come in and build their assets. Thank you.
Thank you, Deborah. I just have 2 slides and we'll take questions. So the next slide basically talks about financing. This is a large project, so we're taking it in bite sizes. The first phase is 1.6 trillion that we're trying to raise. We have engaged financial advisors, unlike my other speakers. Please pardon me, MBO. I think Kuli will yank my chain later on. I should have started with MBO. I had to say thank you and get an applause at the back there. So I should say that, so we've come this far, as a result of support from institutions that, share the vision, can see what we're trying to achieve. And they've taken the risk with us to come this far. And thankfully, it's paying off, because hopefully first quarter of next year, or by the end of first quarter of next year, we will hopefully move to site and start this project. So we thank them, and MBO has been very, very instrumental in this. They came in at appropriate, a time that it was needed. Ikoyi is laughing, but he understands what I mean. So we thank MBO. Now we're trying. The first phase is 1.6 trillion. It's going to be a combination of equity and debt, and also quasi debt, so preference shares. We've tailored the financing to fit what we believe Nigerians have an appetite for. Even though we're raising money internationally, we also want this to be a project for Nigerians, by Nigerians. We structure this in such a way that lots of people will have the opportunity to invest in this asset. And the way we've done the prefs is you can either exit into shares or you exit into real estate. And so there's pure equity and there's pure debt. And also we will be selling part of that land, at an early stage. So this is the first phase. Once we complete with this, we'll then move on to the next phase. Well, we expect that the experience from the first phase, most of the investors will come along with us on the second phase of the project. Next slide, please. I think that should be the next slide. Okay, yes, I have one more. I mentioned earlier that we've worked with experts on this. We've been very deliberate in selecting consultants because we're building on water. It's a huge project, but more importantly, it's a project that is going to impact lives. And so we've been very careful in our selection. We worked with international consultants that have also worked in Nigeria, so they understand the Nigerian terrain. And so the likes of Royal Haskonin, Rendell, these are companies that have done work in Nigeria, but they're very well known in other parts of the world for what they do. Rendell did the marine design. They've been very supportive and guided us in the reclamation on the lagoon and how to do this in such a way that it does not impact on the environment. And even right up to the shape of the island, we've looked at the flow of water. We've looked at drainage system in Ikoyi, how this would impact, if at all, on the drainage system. And we have designed it in such a way that there will be, based on the studies that we have done, the design we have today is that there will be very minimal impact on this project on the existing islands or communities that we have. We have also been meeting with all the stakeholders. We've had meetings with residents in Lekki, Ikoyi Crescent, Parkview, just to tell them about this project. We worked very closely with Lagos State. I forgot to mention that when we started this project, we developed a committee with Lagos State to look at this project, to look at the viability of the project. So the drainage system, we went through everything. We got all the blueprint from Lagos State to see what impact, if any at all, this project would have, and to make sure that in our design there will be very minimal impact. And we have reports in our data room that show that we have designed this in such a way that the impact on existing communities and new communities that come up working with us will be minimal. So we have advisors for the project. AFC is leading the fundraising for this process. We have a lot of the companies, so AEC is one of the companies that is also has worked with us from the onset. They did the traffic study, and they are involved in a number of projects across Nigeria. And it's a well-seasoned company with over 30 years experience. So across we have, Deborah mentioned Da, around the area. Zutari is the one that is the company that did the road design. Did the road design for us. So we have put together a very good team. on this project. Our lawyers, this Trinity, well known in the infrastructure space, not only across the world, but also on projects in Nigeria. They worked on the Lekki Ikoyi Expressway alongside Aluko and Oyebode. So essentially, we've been very careful in our selection of consultants to make sure that the execution is flawless. And we look forward to your support. Thank you very much. We'll take questions. The video that we played, actually, I was surprised when that video started playing. This was a video that we took to Singapore. There was a meeting of engineers in Singapore in 2023. And we felt that Nigerian flavor with the music in the background will make a lot of difference. So if we have that video now, okay. Take questions. Questions. Yes, please, sir.
Thank you. Thank you very much for the presentation. I know you've done a lot of risk management, you've considered a lot of things that could go wrong there and there. We know in Nigeria, so many things can happen, particularly on the political fronts. Now, you can have a Joseph that somebody that knows Joseph today. Another one can come. You are signing with government in power, both at federal and state. If tomorrow another government comes and wants to frustrate this project, what do you have in place to mitigate that? Because number one, the project may be delayed. It may increase the cost of the project, and so many other things can come in. We've seen so many projects in Nigeria that have suffered that kind of thing. Please, can you talk about that, please?
Thank you very much. I think the question is on the political risk. What is the political risk? So it's really the contract that we have. It's the nature of the concession agreement. And I mentioned earlier that we've been very careful in our selection of consultants and advisors on this project. The reason we picked Trinity and Aluko and Oyebode is because they were the lawyers that worked on the Lekki Ikoyi Expressway many years back, and I was part of that project at the time it was done. And as you know, in 2014, this risk that you mentioned crystallized, where the government asked to take it back. And it was because of the agreement we had at the time that ensured that investors that put money into it was able to exit the investment, the project with the investment intact. So when you have situations like this, you cannot completely eliminate the political risk, because to your point, it's a particular government in place today. It may be another government tomorrow. This is a 30-year concession period with 5 years of construction. So essentially it's a 35-year concession period. So it's really the strength of the agreement that will give you all the protection that you need. And in looking at other countries as well, we found that countries with profiles similar to Nigeria, it's always the contract, the nature of the contract that you rely on. We've done it in Nigeria, it's happened. We've relied on that contract, and it worked for us, which is why we're not trying to reinvent the wheel. We're just working with the same lawyers that worked on the Lekki Ikoyi Expressway to help us to navigate that political as well as legal risk. We develop relationships with governments as they come in. The title to the land, we'll get a C of O, so that cannot be taken away from us. The risk that we see is the road itself, because the road is going to go back to government 30 years after construction. Now the government will ask to take that road back much earlier, but we have the real estate investment. And if they do ask to take, there's a process in our concession agreement that talks about the handover or hand back to government when the time comes, and what the compensation will be. So that investors, and as Deborah mentioned earlier, in the model that we have today, about 10% of the revenue is from toll. The bulk of it is from real estate. So with that, we've hedged that risk somewhat.
And services. Ìgbéga ìpínlẹ̀ Èkó, àjùmọ̀ṣe ni.
Thank you very much. So that's the video. Thank you.
Left on the agenda is for me to give closing remarks and say thank you all. So as far as closing remarks are concerned, I hope you've gotten a flavor during the course of the day of the kind of stuff that we at MBO Investing, how we work with our portfolio companies, and as we look to the future, all the stuff we want to do going forward. For me, like I said, it's you know, I was just about to say that I love my job so much that I would do it for free, but I'm grateful that I don't have to. All right, one man has responsibilities, but it's you know, we're all Nigerian, and you know, it's amazing to work in a role where you can see over time the impact that the investments you make have on your community, friends, and your country. And I know that we continue to seek out more funding so that we can continue to do more of these investments. Over the course of the day, you've heard from Afia Care, you've seen what's going on in healthcare. Healthcare for us has so many sort of positive externalities. You heard about RSNL and the challenges that they are having. You heard about Utilita, about the Lagos Arena, Metrowaves spoke about that as well. You heard about sourcing and produce, exporting commodities to over 51 countries. Dr. Tokwe also spoke about FCSL and what they're doing. And then finally, LLHL. And for those of us who are familiar with, you know, Alexander and Gerard, that LLHL project, my mouthful, is going to change the landscape completely of what's going on there. So thank you very much for your attention and your attendance and your attention. It remains for me to also say a special thanks to our guest speaker who's since left, but we thank you in absentia, and also to my colleagues who were responsible for putting this all together, particularly Maury, Temitope, Marco, Mary Jane, Ini, and Aditola, who was Usher, Runa, yes, exactly, and obviously the very enthusiastic members of the MBO investment team for their standard applause and everything. But thank you very much. We hope to be doing this every year. We'll have made more investments. We'll invite people to come back and talk to us about all the countries they're exporting to. So, Larry, you're always welcome back. Thank you. So thank you very much, everybody. We really appreciate it. Cheers. Bye.
MCM Investors Forum, inaugural one. It's very exciting, well put together, very thoughtful. It allowed me to show my appreciation to MBO. We've been doing business together now over the past 5 years, and it has grown tremendously. Like I said in my presentation, a 30 million naira investment has grown to over $1 million in investments, 1,250,000 to be precise. So, and they've been significant to our growth. They've worked the journey with us. So for this, I'm thankful, and I also enjoy working with the team at MBO. I look forward to more partnerships. Thank you.
Okay, it was a great forum. It was great for us to connect with MBO. MBO are one of my investors, so it was great to see the amazing work that they're doing across all the industries. It was also a great opportunity to network and a great opportunity for us to understand some of the wonderful things in terms of infrastructure, agricultural development, film, tech, and all the industries that MBO plays a pivotal role. If I was to invest in one other sector, it would be the agri sector. The agricultural sector is an area where there is significant growth opportunities, both in Nigeria and across Africa. The presentation today really showed the pivotal aspects of agri, and one where I think that there is opportunities for international investment and large-scale investment. Thank you.
Oh, my review of the Investor Forum. I think it's a well put together event. It's nice to see all the investee companies, to see the presentations, to see how far MBO has come. I mean, MBO invested in us in 2021, and it's been a great journey up till now. We've really grown. Corporate governance has been very, very good. And it's nice to meet everybody and see what's in the future for MBO and how we can all come together and participate. Thank you.
Is that we should probably do more things like this, open it up to a wider audience, because there is so much information that shows people a more positive side to the opportunities that exist within Nigeria. And I think we need to show people those opportunities and move people away from complaint mode to what can I do with what is available and what are the opportunities that are available and how can I be a part of that. And I think that's what this conference does beautifully. And the testimonies of some of your clients who you've invested in is very encouraging. You know, yes, there will be failures, but there are also triumphs. And that's the new story of Nigeria, I believe. And I think it's a beautiful story to tell. So, well done to MBO Capital. Okay. So where would be the next level of investment, or where would be the next areas to invest in? Given the information that has been shared in this investor conference today organized by MBO Capital, I would look at the medical space, I would look at energy, I would look at agriculture, and I would look at my favorite space, the creative space, that has so much potential but is greatly underfunded. So those are the places I would consider. And well done, MBO Capital.